Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live on this Tuesday morning. Joining me in studio is our senior economist, Tracy Shuchart. Good morning, Shai.
Good morning, all.
And macro strategist, Craig Shapiro. Good morning, Craig.
Good morning, sir.
Good morning, chat. So, let's start off with the obvious topic. Tracy totally jinxed the Bears. Not like they, haven't jinxed themselves over the years, but she's like, the Bears are going to get a beating. I fall asleep, and next thing you know, I wake up this morning and they lose. How did they blow that game? I don't even know. It's unbelievable. But Cooper was the first one in the chat to make sure that he let you know that. Thanks, Coop. We
Thanks, Coop.
That. So getting to markets, S&P up a skosh this morning, up $7, 65.12.75. You got NASDAQ trading 23,845, up $45. The Russell, damn it, is down a point. It's okay. We'll bounce back later. The Dow is up 47 to 45,622. Russell's at 23.97. Energy this morning, natural gas up 1%, up 30 ticks. We got crude oil up 57 ticks at 62.83, up nearly 1%. Gold remains bid, 36.86 and change, up $9 this morning. Seeing a little bit of a pullback in copper and silver this morning. But still overall in silver, that trend remains pretty positive. Platinum up $12 this morning to $13.98. Bond market's taking a breather, as expected. I mean, the thing is not going to just run straight up into PPI, CPI this week. And so, again, we're going to talk about the bonds, I think, a good amount this morning just because I think they're in this sweet spot just for the market right now. It is what it is. I mean, they're not getting too far lower. They're not getting too far higher. They stay in this range. If anything, they're chipping away lower in yields. When you got 10-year yield this morning at 4.079%. Again, it's just sitting just above the 4%. Wouldn't be surprised if we get a cool inflation print this week that we can see the 3 handle there, I think, in the 10-year yield would not surprise me. Dollars up against euro, down against the yen, and it's up against Swissy. Bitcoin, a little bit of a bounce overnight, up a little bit, 112,900, almost 113,000. ETH remains stuck right around this 4,300 area. That's the landscape in the market this morning. Shai, any overnight news we got to look at?
Well, since we are talking about bonds, the big story overnight was global bonds re-enter a bull market as Fed easing bets extend. So we've had Bloomberg's Global Ag Index, which is an aggregate of global bonds, surging more than 20% from its 2022 trough to its highest level since March 2022. So this is based on traders expecting the Federal Reserve to reduce interest rates and bonds gaining ground as major central banks slash borrowing costs in response to ebbing inflation and labor market strain. So that is the big news this morning. We're seeing bonds across the board higher.
What caught your eye overnight, Craig?
Kind of quiet. One thing that did catch my eye was this looks like maybe a little bit of a turn in dollar yen. There was some overnight hawkish discussion out of the BOJ and with the changing government there. So the dollar yen has been one of the few currencies where the dollar's been pretty firm lately. And so a little bit of the reversal there. Kind of a quiet macro day today. We have the 10 a.m. release of this non-farm payrolls revisions, which
that's right. That's
today at 10 o'clock. Besant previewed that over the weekend, and I suspect he had the numbers, not 100% sure, and he was looking for negative 800,000 payroll revision. Bloomberg consensus is 700,000 negative. So this is revisions, I believe it's through March of this year. So it's the prior 6 months from ending March of this year. So this is a kind of the last throes of the Biden administration, what really was going on with payrolls, with the numbers, and how negatively revised will they be. And then there was a story out last night that said, the Trump administration is going to do a thorough investigation of the BLS and the data. And I suspect we're going to see a bit of a narrative come out of the White House about how bad the lying was, how bad the economy really was that the Trump administration took in. And they didn't realize how bad it was. And so this might be another way to excuse maybe some of the weakness that we've been seeing, or really go after the Fed for being too tight because the economy really needed more accommodation and Powell was too late to give it. So I think we're going to start hearing a little more about that.
Yeah, so many people have come on the show saying that the Fed has been so late to it. And at this point, you wonder, can they even save it? Does it make sense to do it? Obviously, they're likely going to do the 25 basis points. But I know you want to comment on this morning's jobs thing at 10 o'clock. I know you were looking to do that.
No, I was just saying, really, another story that unfolded overnight was the staffing crisis at the BLS. We have a temporary commissioner from the one that was fired, but apparently a third of the high-level roles at the agency are vacant. So we now have a huge staffing problem. So that's going to add another layer
Come on.
of problems at the BLS.
Well, I mean, let's talk about scenarios then today. Is this going to be, let's just say it comes in 800,000. I mean, is that going to matter much?
I don't really think this is going to be such a market-moving event. I think people are prepared for a pretty bad number and realize that the economy, wasn't as strong as maybe everybody thought it was, or certainly. Yeah. So I don't necessarily think it's going to definitely going to come out and add these credibility issues to the reporting and to the data, and I think that's something that Trump and the administration doesn't mind, right? They don't mind kind of telling people that it's the old data. It's, it didn't work and we're changing it. And, but certainly more pressure for the Fed to react to what really was a slower economy than maybe was advertised like in real time when that data was coming out. So, but as far as market moving, I don't think that's going to be such a big deal. I think more importantly, as we transition, well, there is a 3-year note auction at 1 o'clock today, $58 billion. And then tomorrow we kick off the inflation data series, right? We get PPI in the morning, we get CPI the next day. So the inflation data will determine the speed with which the Fed can really cut rates and react to this labor market deterioration. Bond market, started the month on the lows of the month. Yesterday, a week later, making a high. We've set a nice big range here for bonds. I think we probably put in maybe peak easing expectations yesterday or this morning. And I think with some of the warmer inflation data, it's going to be harder to see the bond market really accelerate, to the upside here. I think we're going to see more of a, yields moving higher, and what, the implications for equities we could talk about. But it's going to be harder if we have this hot inflationary data. How aggressive can the Fed be at easing?
Yeah, I mean, again, that's why I think we're kind of in a sweet spot here, because you've got jobs slowing. Slowly economy. A little early. I didn't finish my espresso
with inflation.
Yet.
So in other words, we're in a stagflationary environment.
Exactly. There. See, this is why Shai, here's help. Come bail me out. Yeah, I mean, that's exactly right, Shai. And I think when you look at that, is that really bearish for stocks? I mean, I just don't know that the stock market looks at this scenario and says, well, boy, I can't wait to start, selling stocks. I mean, again, when they can't go down, they go up. I mean, that is the bottom line for me, and I've always looked at it that way. Not always, but as I learned as a trader as time goes by, it's like when the market tries to find reasons to go down and it can't, even though it may not be a reason to go up, it still goes up. I mean, that's just what I've seen over time, right? And again, that's why I continue to build a position in the Russell, because I do think that technically they look the one to most gain to the upside right now. They've looked like that before, and it's not worked. But for risk reward, and ultimately, if this inflation data this week comes out kind of right in line, I mean, the Fed's could be cutting 50 to 75 basis points. That doesn't hurt the Russell. It helps it. So you kind of have a story there. I think overall for technology right now, when I look at the NASDAQ, we had that little bit of a pullback in NVIDIA. Some of those stocks are just going to be rotating up here. I mean, that's what I see for the NASDAQ is more of a time consolidation, a time correction, as some people would call it, where maybe it just doesn't do a ton. To the upside, and it just kind of, back and forth we go, but quietly kind of chip away, and maybe all of a sudden you're like, whoa, we're higher again, and that's what I see in NASDAQ when I look at the chart there. Every dip, again, Craig, it just gets bought. I mean, it's like, I don't have to be a rocket science to know that when I go back and look at a chart, every short break, there's no consolidation on a low. It's a small little V on every single one of them. A little bit of a bounce, consolidation, maybe a little bit of a break, and then rally again. And so I don't need to be a technician to know that.
Yeah, there's been no follow through to the downside on anybody's concerns about this weaker economy. or what the Fed is going to do. It's this Goldilocks situation where we know the economy is slowing and the Fed's going to react to it. And so if the risk is the economy is slowing faster than we realize and the Fed isn't going to be reacting fast enough, that would be the risk. But we don't know that yet. We don't know if the economy is really slowing that rapidly, and we don't know if the Fed is not going to react, right? We still, right now, we have about a 10% chance of a 50 basis point cut for September. So the market's already, pricing out scenarios where if the data, let's say the inflation data this week comes in cool, that the Fed may start with the 50, right? We had dissents at the July meeting, and we had worse than expected labor data. You could certainly see guys like Governor Waller and Bowman pushing for 50 because we missed the July one. So we should have cut 25 in July, 25 in September is our makeup cut. That's 50 to start. We did 50 last September. I could certainly see some more momentum building towards that narrative if the inflation prints come in cooler than expected.
Yeah, I mean, let's not rule that out. Shai, we didn't get the data today. Is there anything coming up at 8:30 today?
So no, all we have today at 10 a.m., we have the BLS preliminary benchmark revision. We did have small business optimism index this morning at 6 a.m. It came in higher than expected at 100.8. Expected was 100.5. So small business optimism has been slowly improving.
RTY.
I thought you would like that.
Yeah, that's a good article. That supports it.
No, I think what you're, if let's say the S&P is having trouble moving material higher because of these collar position, the 6505, strike, and there's some cracks in the NASDAQ story because around NVIDIA, and we've seen now utilities look like they're a little bit weaker, staples are a little bit weaker. What's left, right? I mean, so rotation into some of the smaller caps, some of the cyclicals. You could see how the algos and the systems are doing that. There was a big materials merger overnight. Anglo American bought Tech Caminco, which is a huge mining stock. So maybe some positive momentum in some more of the materials names. Crude up today. You can see some of that laggard bounce in energy. So that kind of bodes well for that rotation into small caps too. The question is, what's really the strength of the economy, though? That I think will be the ultimate arbiter of whether or not Russell can have a more sustained move into the year end or a check back like we've seen so many times.
It wouldn't surprise me if a check back. I think in the short term, with rates coming down and just the way technically it looks to be set up, I think the fact that we are lowering rates because jobs, that's not going to be bullish for Russell long term. But I think markets are kind of in this phase right now where we're kind of in this. It should be seasonally, weaker. Should be. It's a strong word, but nothing should be anything, right? But at the end of the day, it's like if indexes are going to go up, I think they play catch up with the Russell a little bit and kind of balance things out into the fourth quarter. That's the way I see it.
Well, and I think the rally in the metals is also helping some of the small caps. If you look at mining stocks, gold mining stocks, silver mining stocks, they're all starting to break out. And so we are seeing a little bit of a rotation into some of these smaller caps, I think, with kind of some softness, I would say, in, the Mag 7.
Yeah. Again, rotation. That's all it is, right? When the thing gets hot, to me, the only thing you want to be long is the NASDAQ. You always want to be long the strongest and the outperformer. Right now, I just don't see that in this current environment. I think it's, like I said, it's kind of, it's grindy higher and maybe Russell catch up, and who knows, we'll see. Let's talk a little bit about gold again. I mean, remains the most dominant primary trend in this space. There is just no denying this, and it's just like, it's incredible how strong this thing is.
I mean, gold has outperformed global indexes.
Oh, yeah.
Year to date, which is amazing. And it doesn't show any signs of slowing anytime soon. No.
I mean, one of the things that yesterday, I think somebody put in the chat, and was there consumer, what was it? Was there a data point yesterday? Oh, consumer credit. What's that looking like? I mean, do we talk about debt anymore? Does anybody care? Yesterday Stephanie was talking about people spending, and I don't know if I followed up with her on this. I can't remember or not. I don't think I did, but it was thinking of it. It was like, okay, well, they're spending, but debt keeps going up.
So yeah, the survey was 10 billion, and consumer credit came in at 16 billion.
I mean, look, delinquencies are moving higher, marginally. We have these these student loan repayments, mandatory repayments now. Your wages could be garnished from you, if you don't pay. So, there's definitely more strain on the low-end consumer, but the aggregate, with the strength at the high end, which is what Stephanie was talking about, is still making the overall data look a little bit better. But real retail sales and real spending, it's not robust, right? I mean, we have, the nominal numbers are okay because inflation is elevated, but real spending is, it's just kind of inching along. I think just back to gold, I mean, it seems like everybody's been bullish gold, for a while. There's been plenty of strong narratives, but really if you look at kind of the way that the year has progressed, gold had a great move kind of right at the beginning of the year through Liberation Day and through some of the risk off. And then really it's been range bound, since the Liberation Day highs. We only just took it out, last week. So really we were consolidating for 4 months at that high level there between the end of April and the end of August. And now, we're starting to go again because of this slowdown in the economy. So it seems like everyone's been bullish, but I don't know, just to me, just the narrative just keeps getting better into a slowing economy where real rates are falling. The buying from the East and Asia has been strong, and now you're kind of getting this next leg of buying and support from, I think, U.S. investors, GLD, ETF inflows, mining stock inflows, and so it seems like another chance here for gold to keep moving higher.
Yeah, I mean, we're going to speak with our special guest about gold today. Maybe do a quick preview.
So we have Brent Johnson this morning, a Santiago Capital CEO. He also has a YouTube channel, and he also writes a Substack, so you can go check those out as well.
Yeah.
He's probably best known for his dollar milkshake theory. Looking forward to talk to him about, he wrote a post on his Substack about the demise of the dollar. With a sarcastic tone, so looking forward to talking to him a little bit about that recent post as well.
Did you guys catch him with that Lynn Alden, that one that was live? Did you watch that one by chance? It was really interesting because how he talked about whether or not, he thinks that the crypto people, the crypto crowd, should just say, look, crypto is not a currency; it's just a store of value. He goes, I think it would be a lot better off that way, and then Lynn's a pretty strong advocate for Bitcoin. It's kind of, she's one of the best out there anyway, but I think it really sparked her popularity when she started talking more and more about that. And she's really probably the person in the space now, I would say, that talks about this. And her argument was, but it is a currency, and I'm going to talk to him a little bit about that. And I never really talked with you guys much about that. I mean, where do you classify crypto in this space? Is it a currency? Is it a store of value? Right.
I mean, for me, I view Bitcoin as one thing and the rest of crypto as something different. I think Bitcoin has the potential to be a currency over time. It certainly has and continues to have store of value characteristics, and we're seeing some reasonable flows now. Institutional flows are supporting that, whether it's corporate treasury or governments and states are looking at it. We know El Salvador has been buying, and so it's becoming more of a store of value as people are becoming more concerned about the current store of value, which is the U.S. Treasury security, right? And there's been good reasons why international investors have become more concerned about treasuries as a neutral reserve asset. So I view Bitcoin as kind of in that camp with gold as a potential place to store value. And I think over time, with more usage and more adoption, it could transition from store of value into medium exchange. I think the rest of crypto is more speculative asset class, high tech potential, profitless tech type of things, and maybe we'll find use cases for them, just like we have startup money in various parts of tech. And so I view that very differently than Bitcoin. But it often gets lumped together. I think much to the chagrin of the Bitcoin maximalist crowd, it gets thrown in with the rest of crypto. But I do view them as reasonably separate investments.
Yeah, I mean, that's one of the things that we'll talk with Brent about. Any thoughts? I mean, again, we haven't talked much about Bitcoin lately. It's kind of in that phase where gold was in for a while, right? Where Bitcoin, when I look at the chart, I think it could be entering that phase that gold was in, where gold made that kind of a spike high, and it continues to spike highs, and then it got consolidated for a period of time. I think that's potentially what you're seeing now for Bitcoin. that long consolidation. Well, it didn't make a high too long from now. They did make a high in August. I wouldn't be surprised if it enters that gold phase right now. I mean, we compare Bitcoin to gold a lot in terms of, like this is a good time for it. I mean, there's a lot of reasons why Bitcoin's a good time for it. I mean, you had the ETF, you've got the whole Trump administration talking about it. If you go and look at the Trump sons, they've got in their bios, they're talking about WLFI token. I do own some of that.
We know.
Yeah, well, I threw some money at it. You never know. Yeah,
I mean, it is in consolidation phase between like 125,000 on the high end and 107.5, let's call it, on the low end. So, if it's not tanking and if it's just going sideways, that does and kind of works off some of that bullishness, then it would have room to move for a leg higher. And I think Tom Lee posted something yesterday, and he thinks that it will hit 200,000 by the end of this year.
Well, that's not crazy for him. That's like, for him, that's like, I really like Tom Lee, actually. I know a lot of people might give him, shit on Twitter, but I actually think he's really good. I mean, he's been right about a lot of things. I mean, sometimes his calls are a little heavy, like Ethereum. I think he said 64,000 or whatever it was. Yeah, I mean, you never know, but it can't even get to 5,000,
right.
but
I mean, Bitcoin volatility has been coming down over time. So it's become, the likelihood that it could, nearly double in the next 3 months, given that it's a much lower vol asset than it used to be, seems unlikely.
Yeah.
But look, because of the lowering of volatility and more institutional support, I think we're seeing, the ranges are becoming a little bit more narrow. Where the downside case is less protracted, and the correlation to Nasdaq is falling as maybe the correlation to gold, rising. Right, people are viewing it more as a store of value, but gold still. I mean, I own them both, but for different, for similar reasons. But I think when you think about government support, we know China's buying gold. We know India's buying gold. We know Saudi's buying gold. Right, the big boys are buying gold. And they're not buying Bitcoin. And that doesn't mean that they won't get there eventually, but they're not. And right now they're all utilizing gold as this excess reserve store of value as they shy a move away from treasuries. And so that underlying support there for gold will be. And then with respect to Bitcoin, look, being on the same side as the Trump administration in investing seems like a pretty good plan. So we know there's been support. That's been part of the story. But now that, the family's involved and supportive. And so that just means the government administration, positive momentum from a regulatory point of view, likely to see, more support for Bitcoin and for crypto, broadly speaking, will attract inflows, and still such a small asset class, right? The entire crypto asset class is smaller than NVIDIA. Right. So, definitely some room for rotation out of some of the big cap Mag 7 names into crypto that's likely to continue.
Yeah.
Well, and we've had a lot of legislation that's passed recently with the Genius Act that's supporting stable coins and the crypto market. And so this is a very crypto-friendly administration, and so not surprising, as well as all the new ETFs that have sprung up, right? And so that you have all these institutional flows again.
Yeah, no, exactly. We haven't touched on energy that much yet this morning, Shai. Crude oil up 1% again.
Yep.
We've talked about crude oil. It's the market that can't get out of its own way in either direction. Every time it tries to break out higher or lower, besides that one strong move that we had back in June, it's come back in consolidation phase, which again we say is a positive for the economy and positive for crude oil prices down the road for them to come down if they could stay mid-60s or higher, as it allows more drilling and more things financially. It makes sense down the road. What are we seeing in crude?
Yeah, well, I think for today in particular, it looks like President Trump said that he was ready to move forward with a second phase of sanctions or restrictions on Russian crude flows, and they are working with the EU. So this will be kind of a joint sanctions package between the EU and the U.S. And also, it kind of looks like, China's been stockpiling crude oil. They've built out their SPR. That looks like it's going to continue at a similar rate in 2026. So everybody's like, what if China stops buying? But we've heard that every year. China's going to stop buying oil, and it's going to fall out of bed, et cetera. But that, it looks like, from their orders that we can see so far, that's going to continue in 2026. Obviously, that is supportive of oil prices. And I think, again, traders are realizing that, that 137,000 barrels extra is not actual feasible. It's probably more like 70,000 barrels, actual barrels that can hit the market, because most of these producers are already producing as much as they can. Really only Saudi Arabia and UAE have any room to produce more.
Yeah. And again, these stories, the ebbs and flows of it continues to keep it contained. And Craig, I'll go to you. We've got a few minutes left before we get to Brent. I always look for reasons, because mostly I'm an index trader, right? Dabble with some of the other stuff. Crypto bro now, kind of, right? No, but in all seriousness, it's like I always look for reasons like, okay, what is this market environment? Why would I be bearish equities, right? And again, like I've said a million times, I'll continue to say it. If they can't go down, they find their way to go sideways or up. I think the crude oil situation, again, is just another thing I look at and go, not really bearish for equities. So what is your kind of final thoughts for today?
I think just broadly speaking, clearly this administration is more sensitive to risk asset prices and markets really than any other administration has been. Trump is very sensitive to what are markets doing, how does that impact polling, how does it impact him. And so crude oil is an area where I feel like he believes he could control volatility, and that's another thing that he's trying to do is suppress volatility in the crude market, suppress volatility in the bond market, suppress volatility in the equity market. So things kind of just do okay. And the risk really that he has is that we're talking about inflation and affordability in the third quarter of 2026, right? That is the risk for the administration, because that is a losing battle. If Republicans are dealing with an affordability crisis and inflation, they're going to get steamrolled in the midterms, and this whole agenda is going to get unwound because Democrats are going to take back the House, maybe take the Senate, right? So that's what he's trying to prevent. And so he's doing really whatever he can to kind of keep that beach ball, I guess, underwater. Crude oil volatility suppression is part of the game. And so trying to convince OPEC to pump a little bit more, do what he can to keep oil under wraps. But these secondary sanctions are run counter to that, right? If he really wants to go forward and put some pressure on Russia and put the sanctions in, oil prices are going to rip. I think they think they're going to have this impact, and it's going to take money out of Russia, but it's not unless they really go after China, and
which they're not.
which they clearly have shown a desire not to more recently. Then these oil sanctions aren't really going to do anything, and he's going to, this is going to be another taco situation where crude oil can't really get out of its own way, which I think is what Trump is very happy with. Every time you hear him speak, it's gasoline prices are low, and he makes up a number that they're less than $2 a gallon, which they're not, but he says it, and I think that's part of the narrative. So I think the administration is very comfortable in that low inflationary environment, Fed cutting rates, to address the slowing in the labor market, which wasn't Trump's fault; it was Biden's fault, right? That's the narrative. And as long as volatility can stay suppressed like that, it's going to be very difficult for risk assets to really correct. But if we start to get some of the inflation prints, which are hotter than expected, that makes it a little bit more challenging for the Fed, or inflation expectations start to move higher because people think, man, the Fed's going to cut too much. That's when we start to get into potential situations where risk assets can struggle. We're not there now, but that's what we're keeping an eye on here. That's when you can get a little bit more negative. If you start to see some of that inflationary momentum pick back up, that prevents the Fed from going rapidly.
Yeah, no, I agree with that. I mean, the rest of this week with this inflation data is really going to set the tone heading into the fourth quarter, because it's going to set the tone on what this FOMC meeting will be. Like we said, if it's a really cool number, 50 basis point, you look at the Fed funds, that'll probably spike to, like you said, it's 10% chance right now. A cool CPI, PPI, that I think brings that number up tremendously.
I mean, into the September meeting last year, odds were 50-50 for 25 or 50. People were thinking it was going to be 25, and Powell pushed us to 50. I don't think we're going to get there this time, because I think it would seem very political if he did that. But if we got an incredibly cool inflation number and some negative revisions on that momentum, I think that that's possible.
All right, Craig, thank you so much for today.
Sure thing, guys. Thanks.
Thank you.
All right, Shai. Again, quick preview. One of my favorite guests to bring on NinjaTrader Live. Love watching him on X. Like I said, Brent's one of my guys. Talk about
Brent Johnson, CEO of Santiago Capital. He also writes a popular Substack. He also has a YouTube channel, and he's probably best known for his dollar milkshake theory, which he gets a lot of slack and praise for. So
yeah.
let's talk to him.
Yeah, all right. Let's bring in Brent.
Good morning.
Brent, good morning.
You guys hear me okay?
Hi. Yeah, we hear you great.
Can you hear me?
Great to
Great.
have you here today. Yeah, you're good, looking good. I want to start off with gold. Gold has been the most dominant trending market in the futures markets that we cover here on the show, and I think probably the most dominant market this year. I don't know percentage-wise where it compares to everything else. Maybe platinum outpaced it a little bit when that huge move, but nonetheless, gold has been a leader. What's the story behind gold as to why it continues to rally? And is this just the beginning? Where are we? What inning, per se, are we in gold?
Well, we're probably only maybe in the fifth or sixth inning with gold. I think gold is going to go a lot higher in the years ahead. I think it's gotten a little bit ahead of itself currently. But what I really think we're seeing is a put option on fiat currency, right? I think the world knows that the whole world is in trouble, and governments have gotten themselves into a situation where they have to, do stimulus, do bailouts, do QE, all that kind of stuff. And gold has been a monetary asset for 5,000 years. And whenever the powers that be start to get in trouble, gold raises its hands and says, "I can do the job for you if you ever get tired of doing it yourself," right? Now I don't think the people are going to raise their hand and say that, but I think gold could do the job for them if they ever chose to. However, I just don't expect it. I think governments around the world will continue to fight for their ability to, print their own money. And at the end of the day, the reason they do it is if you can't control your own money, then you're not truly sovereign, right? And every country wants to be sovereign. And they want to have that sovereign power. And if you're beholden to a higher power, then you're not truly sovereign. So I think that's what it all gets down to.
I listened to that interview with you and Lynn Alden. I don't know if maybe it was a few weeks back or a month back. I kind of forget. I thought it was really good, and getting you two together was really, I carved out the time to make sure I listened to that. And one of the things that you talked about was, and I think you asked that question to Lynn, is why not just say it's not a currency right now, it's just a store of value? And I heard that conversation go back and forth. I thought it was probably one of the most powerful moments of that conversation. Talk about your case as to why you actually brought that up about Bitcoin.
Well, I think the reason I brought it up is I just don't understand the insistence on behalf of the Bitcoin maximalists, let's just say that it's money. It's an incredible asset. It's probably the best performing asset in history. You can trade that asset for other things, but Bitcoin is not being used as money. It's not used on a wide basis for transactional purposes. It doesn't satisfy debt. It doesn't, satisfy your allegiance to the state. And, at the end of the day, if you're trading one asset for another, you're bartering. You're not spending money. And when you spend money, you don't pay a tax on the appreciation on the money. But if you trade your Bitcoin for something else, you're paying tax on the appreciation. So it's not that I don't like Bitcoin. It's not that I hate Bitcoin. It's just that I don't think it's money. And I don't understand their insistence that it is. It could be money someday. It could be used as a medium of exchange, but it's just not. And I just don't understand the insistence that it is.
So last thing before we get to Shai is, so look at Bitcoin in this environment. It's thriving. We've talked about all the reasons. Trump administration, I guess we can call it still a hedge against central banks and inflation if we want to. Do you categorize Bitcoin in the same scenario as gold as to why maybe gold is thriving? And if not, why do you think Bitcoin is doing so well in this market environment?
Well, I think they're a little bit different, but they're very similar. I think Bitcoin is just a pure play on global liquidity. And when liquidity is plentiful and people are in a speculative mood, I think Bitcoin's probably the premier asset to benefit from that. Gold, I think, can do well in either a super deflationary environment or a highly inflationary environment. I'm not sure that Bitcoin can do well in a highly deflationary environment. Maybe I don't know, but I've never seen that. But I think they are both kind of benefiting from the same thing. I mean, I think the reason they're both up is liquidity is plentiful, but also there's a growing distrust, in the powers that be, and this is happening globally. And I would argue that most of this is being driven not by Americans, but by non-Americans. And the reason is their currencies, I believe, are in a lot more trouble than the dollar. Now, will the dollar lose purchasing power over time? Of course it will. That's what fiat currency is designed to do. Fiat currency is not designed to be a great store of value. So when people say, the dollar's horrible because it doesn't, maintain its purchasing power, I think you're kind of missing the point. The reason we invest is because fiat currencies lose value, right? That's one of the primary reasons you want to own assets rather than just leaving your money in the bank. But essentially, with the rest of the world, not buying as many treasuries, but still buying treasuries. I mean, they still buy treasuries more than they buy any other sovereign bond. So, but buying fewer treasuries and buying gold instead, especially central banks, I think is evidence of two things. One, growing distrust of their local currencies, growing distrust in a harmonious world, and just a growing distrust that perhaps the powers that be won't be able to maintain their dominance, and this is a form of insurance for them.
So I want to move this over to, obviously, we have FOMC next week. I want to kind of get your views. We have inflation proving stickier than we initially thought. And so I kind of want to get your view on, what the inflation print may look like this week, and then your thoughts on what the Fed should or shouldn't do as far as rate cuts are concerned next week.
Yeah, so I think we have the potential for inflation this week to come in a little bit hotter than expected. And if it doesn't come in hot, I don't expect it to come in really weak. Maybe it will. So I think we could have a little bit of excitement at the end of this week. But I would expect markets to then probably rally into the Fed meeting because I am expecting them to cut. I don't know if they'll cut 25 or 50, but I don't think it really matters. I think 50's already priced in. And I think any euphoria coming out of a Fed rate cut doesn't last more than a couple days. I mean, maybe it lasts a couple hours, a couple days, but I don't think it translates into, a huge rocket ship higher. In fact, we're putting out a report today. It's about 40 pages. And I'm kind of on record already, so I'll just say it again now. I think we're going to have a pretty hard correction here in the latter half of September into early October. There's a number of reasons for that, but I just think things have gotten way ahead of themselves. It doesn't mean that we're going to go back into the Great Depression. It doesn't mean you need to sell everything you own, but with the VIX at 15, everything priced to perfection, and entering September, which is typically a time when volatility starts to rise, we think it's very prudent to be very prudent right now.
That makes absolute sense. So you're expecting some sort of correction. How big of a correction are you guys expecting? And maybe elaborate a little bit on, without giving away your entire paper yet, a little bit on maybe some of the reasons, if you can.
Well, so, I mean, the big reasons are that we've come a long way. We feel like a lot of the push higher has been driven by the expectations from rate cuts. So we kind of feel like that's already priced in. The indexes have been driven higher by a handful of stocks. Those handful of stocks have already started to break down from a momentum perspective. They're holding up from a price perspective, but the underlying fundamentals and the underlying momentum factors have already rolled over. And when that happens, what we have typically then seen is that price eventually follows. And the problem is that if these big mega cap tech names roll over and go lower, due to the effects of passive management and the way that has changed market structure, that will then pull the larger indices down with it, we believe.
And what do you expect to happen to the bond market? In this case, we've had a rally. All of a sudden, everybody's saying we're in a bull market. Global bonds are in a bull market. And so what are your thoughts on, what do bonds do in this scenario?
Well, I think they're going to cut next week. My guess is that the long end will rise, so the yield curve will steepen. I don't think the bond market will necessarily love the rate cut. I don't think any of the markets are going to like the rate cut, to be honest. Again, I think everything's already priced in. I don't think gold's going to like it. I don't think stocks are going to like it. I don't think Bitcoin's going to like it, and I don't think bonds are going to like it. I think everything is just mispriced right now. And again, I want to be clear. I'm not predicting, the global financial crisis. I'm not predicting the Great Depression. I just feel like everything is already priced to perfection. And if things don't go perfectly, we are set up to where we could easily have a 5% correction, and a 10% wouldn't surprise me at all.
So what would be the trigger? Because I look at the markets right now, and I think where we sit today, you've had bonds rally, you've got gold strong, you've got volatility compressed, right? I don't think that we're going to get some banger number this week from CPI. Like you said, maybe it happens, but I doubt it. It probably comes somewhat in line. Fed cuts 25 basis points. We're going to be halfway through September. What do you believe would be the trigger to get some momentum for sellers?
Well, so there's a couple things here. Number one, you don't really have to have a trigger. I'll give you 4 or 5 potential triggers, but the thing is, you don't even really have to have a trigger. If you just have a lack of buyers show up again, the effects of passive can take it lower, right? Because I kind of feel like think of it like riding a bike going up a hill, and you get 3/4 of the way up the hill and you stop to take a drink. Well, it's really hard to get going back up that hill again, right? If you just power all the way through, it's easier. But once you stop, it's really hard to get that momentum going again. And I don't see any unexpected momentum drivers out there that are not already priced in. But I can think of a number of negative factors that could happen. Maybe the market maybe they cut 50 basis points and the long end of the curve says, holy cow, why are you doing that? And it jumps higher, and then that causes, a lot of concern. And then one person sells, and again, then the effects of passive take it lower. We've got, I live in Puerto Rico. We've got the United States Navy doing all kinds of, military practice runs here on the island because of what's going on in the Southern Caribbean. Now, that's not a prediction. I'm just saying there's a lot of uncertainty out there. We've got Europe, who has a lot of challenges of their own. Japan has a lot of challenges of their own. China has a lot of challenges of their own. The VIX is at 15. And I don't know what will necessarily cause it. I just think the table is set that if something unexpected happens, or if the market doesn't continue to price perfectly, it could price very negatively very quickly.
Again, complacency, when that to me is a trigger, right? I love what you talked about, riding the bike up the hill, stop to get a drink of water, especially at, I'm getting to that age right now where I got to keep that momentum going, Brent. I get on that treadmill, man. Once I'm warmed up, I'm good, but you get me cool for a minute, a little bit of a different scenario. But yeah, and I think that when I look at the markets, I've been obviously doing this a long time, that easily can be a trigger where, the complacency, again, everything's gotten so relaxed and comfortable that ultimately we get this news that's priced in. I think that's the one thing that you've continued to say. I think that makes a lot of sense. And I hadn't really thought about it as much that way, is that everything is kind of priced in. All of the good news is priced in.
Well, I think the 50 basis point cut is priced in. So if he goes 50, I don't think it's like a shockingly great thing for the market that rallies it higher. And so for him to come out and really surprise the market, I think he would have to do something more than that. And if he does something more than that, then I think it throws into the question, why in the hell is he doing more than that, right? What does he see that we don't see? And again, it doesn't mean that market can't continue higher. This is not a guarantee. I'm just saying when we look at the markets, we don't see a number of new positive catalysts right in front of us that are not already priced in. and I can find, half a dozen reasons why we could get a pullback. And again, the problem is with the market structured the way it is now. A 1 or 2% pullback can be magnified into a 10% pullback very quickly just because of the effects of passive management. I know that sounds a little bit silly, but that's the reality of the world we live in now. That's part of, that's part of the reason. The effects of passive management are part of the reason we have seen these extreme swings over the last 5 years. We saw a huge swing down in 2020. That was exacerbated by the effects of passive. We saw the huge rally out of that. That was exacerbated by the effects of passive management. 2022, the same thing. And then this year in April, the market went down 15 or 20% over a 2 or 3 week period. That was exacerbated because once one person starts selling, the algorithms take over and they just start selling because the way these indexes are calculated. In previous, if we want to call them bubbles, right? In previous bubbles, at least we had individuals with hopefully some rational sense making decisions on whether to buy or sell. Now there's no more, human beings. I mean, not none, but again, it's dominated by the algorithms where there's no rational thought given to it. It's just a matter of if the customer asks for cash, we're selling, and we're selling indiscriminately, and we're selling our biggest positions first because as they go down, their market cap drops, and we have to sell even more of them to get back in line with our index. And I think in the years ahead, I think what we've seen over the last 5 years, I think that is only going to be magnified in the 5 years in front of us. I think we're going to continue to see asset prices go higher, but I think we're going to continue to see terrifying drawdowns along the way. And I think we're due for another one of these drawdowns.
Yep. We got to end it there, Brent. Can't thank you enough for taking the time this morning to spend it with us here on NinjaTrader Live. Chad, please go and follow what Brent is doing. Can't wait to hear everybody talk about your 40-page letter and what comes out of that. And thank you for sharing some of that with us this morning. We really do appreciate it. Thank you so much, Brent.
All right. Thanks for having me.
Thank you.
That's why I love this guy.
I know.
He's the best. He really is. I mean, it aligns a lot of it, what we've been hearing from Craig. And so I can't wait to talk with Craig tomorrow morning about this. Again, when the waters are really calm, it's the calm before a possible storm, right? And,
right.
And I think the way he talks about it, it makes a lot of sense to me. It opens up my mind to like, what's going on here. If you're managing a bigger portfolio, I think it's definitely important to take note to what Brent is saying.
Absolutely. And, and I think he's right. We are seeing softness in the MAG 7, not that they're falling, but again, the momentum is not there.
Exactly. I think that's the number one thing we see. There's no more catalyst to drive us higher. We've kind of run out of them, right? So anyway, we'll talk more about this tomorrow morning on our macro chat. Shai, thank you so much.
Thank you.
All right. Let's bring in Farm. Let's get right into it. Good morning, Farm. How you doing?
Good morning. Doing well. How about yourself?
I'm doing great. I'm going to go right to the charts today. Sorry, we wanted to touch long with Brent, but it's always great hearing from him. Don't you love Santiago Funds? Isn't he good?
Yeah, definitely a follower for sure.
Yeah. So I want to go over the Russell first and talk about it. I've been continuing to build a swing position here, and one of the things I've been looking at is just this, we've been in this I blocked out this area here in the RTY. I think it's important that I shed a little bit more light as to why I've been kind of building a swing position here. And it's just because when I look at what we've done in the RTY, and I actually made that a little bit bigger than I wanted. This is really more of what I'm looking at right here. So this was that area where we consolidated, tried to break out higher, come back in, consolidation. We had a huge breakout lower, consolidation, multiple highs up in here. We retested the top of it. I look at Russell and I think that in the short term, I think that these double Bollinger Band peaks are very realistic to test, which comes in right around 2470. And again, that's why for me, I've been buying dips in this area. And I think that it's really, risk reward poised for me for a swing trader, because anytime I see Bollinger Bands continue to make higher highs and the Bollinger Bands pointing outward like we see here, it's called range expansion. is what I call it. And I look at it and go, I just want to buy dips on moving averages with tight stops and see if they can run. And so this is more supportive of to want to show technically why I like the Russell. And I've talked about, yields coming down across the board, which again, I think gives a lift to Russell. So you've got that type of a scenario. So I just wanted to really go over that with me this morning. I don't have a lot to share in other areas. I think, going back to what Brent had said this morning, I think what gets really interesting here, everyone, is the CPI data later this week. What happens there? We don't have any real data today. We've got that data today that comes out with the jobs revision. And you heard from our crew, 700,000 is expected. 800,000 could be kind of what Percent hinted at. So watch for that at 10 a.m. So I think that will potentially be market moving news. But I think you're looking at a quiet day in the indexes. I still favor Russell to the long side. I'm buying the dips, although it's down a little bit flat this morning. When I look at the indices across the board, I see more consolidation, two-way tape. And again, just a short favor to the small caps. Let's see what you got now, Farm.
Yeah, we've talked about this before, right? The Russell loves that Goldilocks narrative, and I feel like we're, broadly there right now. I mean, labor was a bit soft, but clearly, at least as of now, as of yesterday, the market has sort of shrugged that off. We got the human response at open on Friday. That was pretty nasty. But unless we were lulled to sleep yesterday, which is always possible, there wasn't really any follow-on selling. So I like the Russell as well, as long as, rates are doing what they're doing. And as long as, labor doesn't get, too catastrophic, you got a whole nother month, right, until you really get the data. So that's a good spot. I started with, let's see. Yeah, I'll start with ES. ES is interesting here, actually. There is a sequence in play that I'm going to have to keep in the back of my mind tonight. I'm using what I call an inception box. We have a box within a box within a box. And yesterday's inside day range is that first box. And that doesn't always exist on any inside day. But on any inside day, generally, if you break and sustain above the highs of the inside day, you're going to test, the high or the open or the close or whichever, color candle is to your left. You're going to test, basically the high of that candle, your mother bar. You break and sustain below the lows of that inside day. You're going to test, roughly the lows of that candle immediately preceding it. Because of the location of Friday's candle, the high and the low, it's at a very, very critical location. So because of that, the break of yesterday's inside day becomes extremely important. On Jackson Hole Day, that was the last time we had an inception box. And at 2:30 in the morning, we got a look below and fail of the inside day low on a cash hours basis. And we all know what happened after that. We broke the inside day high. We bid it from above just before Jackson Hole started, and then piss missile, right? So last night, or this morning, I guess you could say, at 3:30, we looked above and failed yesterday's high, the inside day high. Don't mind the puppies. I have some new puppies. They might squeak a little bit. We looked above and we failed the inside day high. And we've shown a little bit of weakness here. The one thing that I'll say is that, in a bullish trend, bulls can generally take an ETH setup like that from Jackson Hole and run with it. It's a little bit harder for sellers to do that. You kind of usually need to see that play out during cash hours, but not always when things have been bullish. So I'm keeping that in the back of my mind today. If we now lose, I'm saying, let's say 65, bare minimum, we'll call it this pullback low here, but if we're offering 65.08s, then we risk sort of this higher time frame spot that we've struggled to sustain above numerous times. And this is going to be key. It's a huge range on purpose. I don't want people getting short thinking it's a failed breakout. So I've got a kind of a wide range, 64.96, 65.02, but really you're going to need a takeout. You would have to engulf yesterday's range off this look above and fail of yesterday's high. So that's going to be in the back of my mind. Everything looks constructive. We came up here, we tested the August highs again. We didn't quite fill the single prints from Friday. So that's sort of in the back of my mind as being a little bit cautious, but generally holding above, the 65.08, 65.09, let's say, is constructive to retest yesterday's high, which was 16.5. We definitely saw a seller up there. It was probably a lot of gamma banana nonsense, but you know, a little bit wary of that. And, you know, at the same time, we've got NQ. I'll pop over and do the 30. NQ I referred to on Sunday night. I think, at least in my plan I did. I think on Sunday night, though, with Nick, I referred to 23,869 to 23,885's final boss. And the final boss so far is doing final boss things. So really breaking and sustaining above this 869 to 885 is opens new highs for me. So until or unless, you know, again, sellers come in, they take out an overnight low, they take out a prior day low. There is a setup then for things to flip pretty quickly and our sentiment to change very quickly. So that's in the back of my mind. But this would be like the 69,420th bearish setup that has not produced bearish results since April. So like, I'm not bearish, but I'm aware of the possibility now that we have failed above yesterday's high that potentially we could see some weakness creep in. But so far, so good. There's been no follow through from sellers here pre-market. And like, where were they yesterday? Why did they take the day off after Friday? So far. And like, you know, the other thing about that is like, if we were really worried about, you know, some impending slowdown that was irreversible, like, why is the Dow spiking up into the close yesterday? And crude saw some relief. Like, so, I mean, it doesn't feel like the market is too concerned about Friday. You know, maybe that changes with today's revisions, but we are expecting it to be like, you know, 3 billion jobs revised down. I mean, who knows how many they're going to come out with, right? They want the rate cut. So maybe it's 3 million or something instead of 800,000. So that's where I'm at today. I'm just sort of keeping that in the back of my mind that, you know, if we do get a bearish engulfing today, it sets things up in an interesting way to retest Friday's low. And then all of a sudden everything changes right for you. So that's the back of my mind, but constructive broadly until we see proof of that. You know, ES and NQ were innocent until proven guilty. And we'll see what we get today. But hopefully some range in volatility anyways today and tomorrow.
Yeah, I mean, we hope, right? I mean, I think the things that we didn't talk about this morning was we're in the week of rollover. Not that I'm seeing a ton happen with the roll yet in DEES. I actually was looking at, you know, S&P DEES. I mean, it's not really doing much at all yet. But we have that. You know, the market, I mean, this is why we cover this pre-market, everybody. We cover what's happening from a global macro perspective so you understand when you come into the day. As a day trader, some may say you don't need to know it. Some may say I want to know it because I kind of want to know what's going on. I've learned that over time, because I've been through so many different market environments, that I like to understand an actual theme of what's happening in the marketplace right now because it helped me as a scalper. How did it help me as a scalper? I come in, I know what I'm dealing with, right? I mean, am I going to come in on a day like today? You know, I never like being super reactive to just the day. I liked understanding the market environment. And obviously if the day shifted, you know, I'd be prepared for that, but I don't like coming in, you know, as a day trader. I learned to be able to come in and be way more prepared, understanding market environment, adjusting my risk coming into the day, having my head kind of wrapped around knowing that it's the week of rollover. I've got CPI coming up. I'm not going to come in and like get in a full board, you know, short position on a breakout higher in NASDAQ because I got a short signal, right? And so it's like I trim my stuff down, you know, and just I lower, I don't want to say lower expectations necessarily in terms of P&L, but what I expect out of a tape. So I'm mentally prepared for the day. And that's what we try to provide here each and every morning. And I think that right now you have vol compressed, you have, you know, rollover, you have anticipation of CPI, you have divergence in the indexes, right? And what does all this mean if you're trading NASDAQ, S&P, or if you're trading, you know, the RTY or the Dirty 30? It just means ultimately, likely just trade a little bit smaller. I mean, be small and smart. I put that in my note every morning. It's like, it's just not a time I see any sort of aggressive behavior. And it's like, if things aren't working, I wrote this in my post this weekend. Is it me? Is it the market environment, or is it my strategy? Unlikely to be strategy right now, because intraday strategies in this environment, farm, I mean, looking at your stuff, hearing what I'm saying, everybody's talking about, it's just not super clean, right? Really dial it back, be patient. We want you guys to stay in business for as long as possible. That's why we try to provide that and calm you coming into the day. We've got Merritt coming up, who's great at that as well. And when I see this, farm, it's like coming into today, you know, it's like we're between your areas, you know, I mean, it's just about being small, right? I mean, at the end of the day, right now, if you had to summarize it with 30 seconds left to go, what are you looking for coming into today? Like, what's the mindset?
Yeah, for me, when we're trading in a big balance like this, which is 4+ weeks, I'm looking to trade against the failures. That's what I did yesterday. I stocked a trade for quite literally 2.5 hours yesterday. I did a video on it. I'm actually going to share it, I think publicly, on yesterday's trade. But I quite literally stocked it for 2.5 hours, and I'm waiting to see which side fails and punish them. And given the prevailing bullish trend, I'm generally looking to punish sellers once they fail. So I would like to see an opening drive lower, let's say, for example, and it doesn't have to be at the open, but if you get an opening drive lower and sellers just can't get it done, they can't get any traction, let's say below, even 65.02 half, then I'm looking to punish them for that failure. So when we are in balance, I'm always looking to see which side fails first, and I'll take the counter move to that and then just see where runners can run. It looks like there was a couple of questions about order profile or volume profile. It is under order flow volume profile tools in ES, and I'll do mine, that 30-minute chart. I'm showing weekly profiles, and then I've got each day's profile here. But you can do whatever profile ranges you want, and any questions about that, feel free to tag me on Twitter or whatever, X.
Yeah. I love what you did with Nick on Sunday. I thought that was great. I tuned in. Hope everyone goes and checks out that Sunday episode. Really a good week ahead that you and Nick did. Appreciate you guys. Appreciate you, my brothers. We'll see you tomorrow.
We'll see you, Dilly. Take care.
All right, chat. I didn't say good morning to you earlier. Let's say good morning to you, right? I mean, we've got a whole bunch of people in here. I can't even go through and say hi to everybody. It would take way too long as we're getting ready for my boy Merritt coming on. But good morning, Paulie, Cooper, Engineer, Bear, Melvin, Harry. We got Craig, Axel, Emilio, Mycerona, Rally, Infinity, Ivan. I'm going to get as many as I can kind of here as I scroll through. It's a lot of the regulars. Got to make sure I say hi to them. Spider, Kenshin, Larry Pumpkin, Colonel, Dr. Steve Brule. Of course, we've got Fractal Furman here. We got Lee B. We've got GDL, JD. Let me scroll all the way down now to see who are the latest ones that are in here. Ivan, Samuel, Gabsy, Brett, William, Doug, Landis, Carlos. Man, we got a lot of people in here. Wayne, Chris, everybody. Thank you so much for being in here today. On really what's been a slow day, but we've got really one of the best in the business coming up because what is it? What about Tuesdays? We said in the before was we've had black boxes, we've had Tuesdays with Maury, Tuesdays with Merritt. That's right. It's time to trade the open with Merritt Black. Good morning, Merritt.
Good morning, my friend.
So today we come in, kind of a lot of crosswinds this week, right? I mean, we talked about it. You've got the week leading into rollover. We roll on Mondays now. So CME moved that a while back. We don't have Thursday roll anymore, which I kind of like the roll on Monday a little better. Complete the week, move it to a Monday. You got some inflation data coming out. We've talked about a little bit of divergence in the indexes. You probably heard that little bit of that conversation earlier with Brent. Kind of a lot of moving parts this week. Not always do we have a week where it's kind of like just volatility compressed and just kind of quiet. And we know all these things are coming up and markets just seem pretty quiet. I know that you're one of the best in the biz with putting the blinders up and saying, I don't want to know about all that stuff, but I want to come in and do what I got to do. But when you know a lot of that's coming on right now and you know that the market is just kind of, you look at the S&P's up $3 today. What's the thought process coming into today?
The usual, man. Just like you said, it's where is there opportunity? What markets might be offering something better than others? As you know, I kind of have like a multi-market view, and then I have indices that I'll focus on as well, just for intraday kind of more scalpy stuff. So today I kind of like gold. I know that it's been a rip roar. I know that it's, some people call it overextended, but quite frankly, short term, the highs don't look great. So, if I can get some kind of a decent pullback within this rotational Globex session and find a spot to get long and be able to hold it long, I think we can make a run at those highs, which maybe it'll do while I'm talking here instead of while I'm in it. But yeah, that's one of my main ideas for this session. Equities are in a tough spot. I would need to see some more of a pullback. I think we do have a really good line in the sand in the S&P. I think that this kind of 64.95, 64.94, 95 area is a really good spot to watch for kind of a bull bear over under. You can see we've had this line here for a while. It was an older volume profile area from before, and now we actually have these 2 days which we can merge together. And if we take a look at that, it's almost at the exact same spot where we were on the older balance area. So that to me, and that's the low of day yesterday, right? So that is the line in the sand for the S&P for me today. I want to be bullish above, bearish below.
I'm glad you brought up gold, because I do think that would be the market I would be looking at as well.
Yeah.
As a day trader coming into today. It's
Yep.
got a more dominant trend. I agree with you. The high does not look great. It's already rolled. It's going to have less of the crosswinds right now. The divergences we're seeing in the tape, the S&P is in the middle of rollover, and it's just got that vol compression. To me, I wish more people thought that way about how you have the multi-market strategy. And I don't want to get too deep into the trenches this morning about how you've been able to move into multi-markets, but I really do
I was
wish
a single market guy
one of the
for
things
years.
for years, right? That's what my point is. So it's like, how do we expand other people to come in and start looking at gold, Merritt, with the confidence that you have? I think that's it's really important for, I think, the growth of traders.
It's just got to be, pull up the sim, switch from live to the demo, right? Go look at it. It's almost like you do when you're just learning how to trade, right? Except now you've got a lot of background information as a trader, where you've maybe have been trading the NASDAQ for a while. Okay, we understand that gold also has a high daily range. It moves a lot, so maybe there's that little enticing moment. So anyways, turn on the sim mode. Go check it out. Go look at a bunch of historical days with your charts. You might need to dial your session timeframes, right? Instead of, for example, pit session for equities. I live in Nashville, Tennessee, so I'm Central Time, right? It's that 8:30 to 3, right? Well, gold is 7:20 to 1:30, right? So different pit session hours. Just Google futures pit session hours, and you'll find a good link for seeing what those are. So understand when the technical open and close is. Understand the tick value, what kind of volatility, like dollar per kind of daily range thing. And I actually put a tweet out about that. It was a little project I had one of my junior desk guys do recently. They gave a bunch of markets and kind of the daily dollar value of average range, right? So understand the risk you're dealing with so that you can get your sizing right, things like that. So we're kind of laying the foundation here. Then get your tools dialed in, whether it's VWAP or market profile or whatever. Get your session times dialed in. Have your template, and then go back and look for your setups. Just start doing that visually. Just start taking a look. Hey, it acts a little bit differently around this mean reversion play or this trend play. It likes to pull back to this moving average. It does this with VWAP. And start to get a sense for the historical kind of personality of it. And then start actually clicking some buttons in sim just to dip the toes, just to experience it more in real time rather than just historically. And then once you get a number of good reps in, and you start to build a little bit of confidence that, hey, I kind of understand this market. It's not this crazy, dark, unknown thing anymore. Go trade it.
Yeah, no, I
So
think
maybe
it's a
that's
great
more
way
than
to
you
lay it
wanted
out. I think
right
it's
there, but
No, but it's important. I mean, no, I agree. I think that, I like that you do that, and I think talking about that more is massively beneficial because you have so many people so fixated on the indexes, expanding them to another market, especially if they're struggling in the indexes, is not the easiest thing to do. And I don't necessarily recommend that they just, start market hopping either. But again, having a process in place, some people might resonate better with gold treasuries. Like, I mean, some of my really good friends just trade treasury. Some of them trade crude. Some of them trade, natural gas. Some of them trade gold. And they don't either. Like, how would you trade the S&P or the Russell? And I'm like, well, I like it. It resonates with me because the key word you said there was personalities of the market. And the beauty of today's markets is you've got sim, you've got micros, and you've got, the E-minis. So you have ways to graduate from one class to the next, and I think that's important. I want to say a
Oh,
quick thing
man.
before I
Yeah.
hop off here, though. You saw this move lower in the market real quick here in the S&P and NASDAQ, and everyone's like, well, was that a big move? And I saw that in the chat. Again, guys, remember, this is rollover. So you're going to see sporadic times throughout the morning, day, later afternoon trades where orders just come in. Kind of, people are just saying, look, I'm either selling this position or buying this position back as you lead into the new contract. And so also expect some of this randomness there's always randomness, but more of these types of things where you're like,
Enhanced
well, what's that
randomness
news and
for
what is
sure.
that? Exactly. And it's rollover, man. I mean, it's going to be sporadic. You don't know when it is. I mean, I used to always scratch my head at rollover and be like, dude, how did I just get blown out of this position? It's the stupidest thing,
Yep.
and nothing happened in the market. And you're like, well, you're just like, oh, it's rollover. And
And then
that
it's right
only
back to where it
escalates from
was.
here on
Right.
out. Yeah, what the
Yeah.
S&P did. And
Yep.
so, again, everybody, nobody better to be at the helm on a day like today where there's not a ton going on. Merritt, appreciate you being here. Appreciate your guidance to all these traders out there. Have a great day, my brother.
Thank you, sir. Look forward to seeing you. Good morning, chat. Good morning. Good morning. Daniel Reynolds wants to know how to set up volume profile. Maybe when things die down a little bit, and if you're still around, Daniel, after this kind of opening flurry, ask that question again, and I'll be happy to kind of pull up a new chart and we'll set up a volume profile together. It'll be my pleasure. So I actually, as I told Deli, I'm interested in crude. Good morning, Loon, Edwards, Kenshin, Fractal, Jeff, Joe, Emilio, G-Man, R.I.P. G-Man, Miscellaneous, Trade EGL, Trade Hank, Juice and Meat. Good morning, Paul. Oh, me. Yeah, I tried it once right in here, and it was kind of choppy, kind of stally, and I was thinking that we would actually kind of go maybe take out this low and get a little better trade location before we ran these highs, but not to be. We had prior value. I think. Oh, we had prior value there. Yeah, we did. These profiles are a little off here because I need to set up my chart book better because this is equities pit session hours. So, but as you can see, the bulk of the pit hours for equities for gold, which is incorrect. You see we have a value area high right there from yesterday. This says live right now. It'll say live when we open up the next session. That was really my favorite thing of the day. Oh my goodness, edgy. Alcaraz. Whew. I watched the first two sets for sure. You could, if I recall, Sinner won like he served first when they started the match. He won the first couple of points and just like big serves and then kind of put away winners with the big forehand. And it's like, okay. And then after that, after those first 2 or 3 points, Alcaraz played out of his mind. Oh my goodness. It was a masterclass in somebody just being in the zone. He was never overly high and low at any point in the match. Even his fist pumps and things, he was calm, he would raise that fist and just hold it. Man, that was a absolute, I think even for him being one of the best players in the world, if not the best, it was a rare occasion. I think even for him, it was just really, really cool to see. Oh, I'm a Federer guy through and through. For me, it was Sampras. He was my guy, and then Federer. I don't really feel like I have a guy now in tennis. Sinner, Alcaraz, any of the Americans that are trying to break through. I just don't feel like I have that guy that I'm obsessed with in tennis right now. But with Sampras, that was the case growing up for me. And then Federer, that was absolutely the case. So anyways, some of you, I'm sure, had enough tennis talk here. Let's get to the markets. Yeah, Tommy Paul is very likable. I agree. There's gold running the highs. I'm actually surprised how many yeah, Steve says, I have no clue what you guys were talking about. All these names. Who are these people? But I was actually surprised at how many of you in the chat were vibing with the tennis talk. Tennis is a bit more of a less popular sport, at least in the South where I'm from. Everybody's all about football, right? About 12 minutes until the open. I'm still just kind of preparing, flipping through some charts, seeing what's going on. Oh, I know what I have to do. So whenever I switch symbols, I would need to apply saved merges for these things to work. Yeah, I'm not gonna be swapping. I feel like I can't talk today. Flipping symbols with the profile chart. I mean, I'm gonna have to today, but I need to set up a template with maybe some tabs so I can control session times and saved merges a little better. So, Mike, if you're watching. So like I said, we have a good line in the sand with the S&P. We don't have that every day. I don't come on this stream every day and say we have a good line in the sand. But we do have a good line in the sand with the S&P. We have a 2-day balance that totally lines up with this big balance that we had before. Let's merge all these days. Right, and then the little holiday day, which, by the way, just filled in this little low volume, low usage area for market profile term, and then boom. So we had a big balance. And then what have we done? We reverted lower to a prior area of balance right here. And then we drifted back into the original large balance, and that is where we spent 2 days balancing until yesterday attempted to break higher. So we got a good line in the sand. Call it 6494. Forgotten trader, I feel like there's a lot of preconceived notions about Americans, right? I really feel that way. You might be surprised what some of us are like, or what our views are on things compared to what the media tells you all Americans are like. Americans are very, very all over the place. You can find all kinds. Yes, I was with S&B. I came on as a regular equities trader, and kind of floundered around as an equities trader for a while, and then moved into the futures side of things, and got the tap on the shoulder to start up a futures desk at S&B. And then in 2020, I left and started my own desk, and that's what Apteros Trading is, my company I've had for 5 years. Yeah, I'm not saying Americans don't also have preconceived notions about other places. It certainly goes both ways. Lance was not at S&B when I was at S&B. So no, I've never met Lance. Adam, yes, absolutely. Yes. You're going to have to learn to hide a little bit, right? Breaking up orders, using some algorithms, doing some things. Probably trading more than one market, things like that. You can't just be a huge trader and just come in and every time you trade, you slam 150 lot, right? You just can't do that. Machines will begin to identify you and know who you are and what your position is, and begin to take advantage of that. So the larger you get as a trader, I believe what's the word where you're always like looking over your shoulder? Not cautious. What's the word? You got to be paranoid. That's right. Thank you. Paranoid and prudent. Yes. And aware. No, North America is a continent. America is a country. But hey, you're my brother for sure, no matter where you are on the continent. All right. 6 or 7 minutes. Margin per ES contract is not something that I would recommend for traders. It's something that the broker demands. You have money in an account. If you want to put on a position, the broker says, great, we'll need this much money from your account to kind of hold as collateral while you put that position on. That's the way it works in futures. So as you can see from yesterday's profile, we have a really poor high. Obviously, we took that out, as you see on my intraday chart, overnight. That's what that little ramp was right there. In fact, we broke it, stall, lack of rejection, lack of wicking it and coming back into value and range. And then that's where you get that ramp there. And then they've crushed everyone's soul. Now we can just kind of revert back and also make the people who took the breakout lose as well. So everybody loses, futures markets win, right? No, I don't typically use a 1000 volume ES chart. I'm typically looking at something a little bit slower, more like the 3000 here. It was just on 1000 from flipping back and forth with gold. Things have been kind of slow here. You know, volume is split with rollover and things like that. So here kind of pre-market, it doesn't hurt to have it a little more dialed in, a little more granular. But then we'll probably switch it back. Nothing magic about different time frames. The chat's still arguing about the names of continents. Let's focus on markets. Oh man. I mean, this is a nice little pattern here. I'm not into it. I kind of wanna buy it, but it's again right here into the open. I want to let things shake out a little bit, but it's just not a now the chat has moved on to naming gulfs. We got full geography in the chat today. You guys are lucky this isn't Kane's stream. Kane would be ripping you. I'm just gonna smile it off. Crudele says crude is moving a little bit. I think crude, I'm not in it, but I think crude was recently in a whoa. I think crude was recently in a kind of a swing long spot, Deli. You know, just barely kind of went to near those lows for kind of the second half of the year here. and we found some buyers pushing up back into, last week's range and value, and we're kind of coming off of the lower end of developing value for the quarter, and all that kind of good stuff. So I think it's a decent bullish chart in crude where we could run back up to close to 70. I'm not seeing anything here for me today. We'll flip back to the S&P here, watch the open. Might find some little scalps. We'll take a look. Banged into that long right there. Beautiful timing. A little bit of buying came in. Now we can see if we get lucky. Sellers pressed back, absorbed a little bit after that pop after my entry. There's that herky-jerky kind of rollover type movement where we got up to VWAP, and next thing you know, we're all the way back off of almost nothing significant on the tape. Very nasty movement here. This is absolutely bad news tape here, guys. I might head back to gold land here shortly after the resolution of this guy. It's just skipping around. I don't want to lose any money on this this position. I'm actually going to do a move to break even, which is something that is not a part of my repertoire. Oh, gold highs. The one that got away. In all reality, on a serious note, you have to protect yourself from those type of thoughts. Right. So what just happened with me psychologically? I glanced at another monitor, kind of a multi-market screen that I have, and said, okay, gold, look at that. It's way up at the highs, new highs. And I tried to buy the lows, and I was close to catching it, and it never gave an opportunity to kind of get a good setup for me. You can let something little like that eat at you. You can let it cause you to go chase, do something you normally wouldn't do, some form of revenge, even if it's just so subtly subconscious. And so I just want to encourage you guys to protect yourself against those type things. Try to be self-aware, just like I was, right? I had that thought, I said it out loud, and then I thought about it. It's very, very, very important. We could try to get some kind of a pullback within the trend, within gold and whatnot. So we'll watch it. I'm actually watching this S&P as well. I hate that my stop is where it is. That's still, that's more of like a place where I'm interested in it, but it continues to not trade nice. Could go for a small ad though. I actually just missed it looking at the chat. All good. I could still do it. It's still waiting for us. It's still waiting. It's still waiting. It's not the right conditions to be getting that aggressive. But just based on how tight this little chop fest was, if we start to get above VWAP right there, surely there can be a small stop run higher. So the ad would not have paid off if I would have taken it. But now if it tries it again, I'm officially not going to add. Above and below a few times. In fact, if it doesn't start to crack higher through VWAP, I hate to do it. It's such a piddly little profit, but I might just take a little something off. Here's the break. Let's watch the delta. There we go. There's some buying. Let's see what happens. Very low expectations here. But like I said, this is just go back to the market profile. Go back to the simplistic view. And I apologize, these are overlapping a bit. They shouldn't be. This is just a prototype here we're still working on for market profile. Here in A period, take a look at this guy up here, guys. Look at this. This high is so poor, only a mother could love. So that is the spot that this trade could easily go take out. Just to test for better excess, just to see. I wonder if I can make this. Nope. There's a lot of selling. I'm going to scale one. You see that on the tape, guys? Slamming the bids. A little bit of a momentum shift. So it's not what I wanted, but I'm trading what is. Now, granted, it's rollover, so the tape is going to be very misleading at times. Let's go ahead and throw out a limit up here. to take some off if we run these poor highs from yesterday. So at this point, we could say there's a passive buyer absorbing some of the selling. I still think that it's a beautiful spot to scale out. We kind of had this tight consolidation. We broke. What do the buyers have? Earlier, I said, watch Delta. Let's see what they can do. And what did we see? Whoosh. Sellers come in and slam it. So it's a great scale out. I'm going to scratch everything. Sellers dominant. And that saved us or made us a little bit more money on the scratch decision. So some good decision making there. I like that I talked myself out of not adding. I like that I really tightened risk given the just atrocious conditions. I had a really good game plan for where I thought the market could go. I like that I scaled when I saw a ton of selling hit the tape. And I like that I scratched rather than once things were clearly falling apart. So happy with the decision making. I'm just going to unlink this so we can just keep it on the S&P as we flip around in on our other charts to gold. Sorry, I have not had my eye on the chat. Try to catch up with you guys. I know the guy with the Russian type of characters for his name. Here it is. Watched your VWAP videos from 2 years ago. Still better use RT. I suppose this is still better to use RTH VWAP. That wouldn't be what I said in the video. I use ETH as the workhorse and RTH as a supplementary additional Swiss Army knife tool when appropriate. What's one of the most common times that I feel like RTH is the preferred VWAP, or in our for NADRO people developing value area that we look at for intraday execution? When you have a huge Globex overnight expansion, and so you get the VWAP bands that are just super wide, then you can have the RTH, which is going to kind of start fresh, more recent. And so it's going to be more usable rather than we may not touch both sides of a blown out, DVA VWAP bands for a long time. So general things like that. But ETH is my workhorse. What's the job description of volume profile in DVA? Those are two different things. There's no volume profile in DVA. So volume profile is volume at price shows a distribution. DVA is the developing value area, in which case for me, there's multiple versions of developing value area, but I use a VWAP, volume weighted average price one. So they're very different things. Trade EGL says, can we talk about why you use bars, like OHLC bars, instead of candles, please? Sure. I believe that the most quintessential unit of monitoring great market movement across any time frame is actually viewing the market through the lens of rotations, legs, swings, right? And so just to kind of show you what I mean, it's more of smoothing out noise. So for the session, we would have an up leg, down leg, up leg, down leg, up leg, down leg, up leg. I'm going to smooth these out, down leg, and then up leg. That's where we are. That is how I see the market. I see a series of up and down rotations, for which NADRO users refer to it as understanding the rhythm. So this is our rhythm. That's a discretionary process. You could make it quantitative, but not to get too caught up in rhythm. That's how I like to view it. So I'm not interested in some kind of candlestick pattern with beautiful zoomed in bars of, oh, look what's happened in this market, or, you know, whatever. That type of information is something that I think myself and most humans get sucked into and get really granular about and kind of lose the forest for the trees. So I scrunch in a bunch of data onto a chart in terms of how my x-axis is set so that I can focus more. I scrunch in those bar-to-bar pieces of information so I'm less likely to fixate on them and look at them. And I'm able to see the market more like how works best for me, which is seeing rhythm and rotations. I'm a pullback trader at heart. Anytime I'm getting long, it's because the market has come down far enough for me to get long. I do make exceptions. I will take a rare breakout style trade, but 90% of the time, I'm trading pullbacks. Now, what people don't understand is that me getting long, the pullback that I got, I was like, why doesn't this look like, because it's the wrong market. Let's go to the S&P. Me getting long, where did I get long? Right in here after the open, after this little move down, I think. Or was it here? Let's turn on the fills and see. I don't know. I don't remember. Great. This happened to me last time, guys. Why doesn't it show? I'm trading a live account on ES. There's no, you know, nothing weird about what I'm doing, but the fills for some reason don't want to show up. I don't know if that's because I have some type of a potential strategy attached. It is. It's because I had a strategy attached, and those trades were not a part of that strategy. Okay, so it was here at the second arrow. So if I'm getting long, and there is a little bit of an exception to this one, but if we look at short-term rhythm, right? I talked about liking this one actually pre-market, decided not to do it. Then I let it come in and pull back on the open, and then boom, as soon as it starts to turn off of putting in a low, that's the moment of entry. And a lot of times for my scale outs, I'm doing the opposite. If I'm long, it's after, you know, I call this an up move here. This is a flag, right? So just a down move, up move. And then we get a problem on the delta. We get a little shift in momentum. I'll take the scale. And that was where I scratched it. So have I ever gone totally off topic, or am I can't even remember the question I was answering. What was the question? Why I use bars versus candles. It's so I can see the market through that lens of those rotations and rhythm and things like that. If it's bars, I think are sexier, prettier, more colorful, visually appealing, all of those things. but the candles, I misspoke. Candles are prettier, but these scrunched up bars help me do my job better. And that's what's most important. Let's take a look at my little strategy. I need to make it an indicator. It's an indicator, not a strategy. So I was brand new to Ninja and I made it as a strategy that doesn't actually buy or sell. So there are the quantitative signals for this. Now, it's meant to be more of a, hey, we've had a bit of a rhythm type of move. Here's where there's a potential turning point. So, if I'm trading well, a lot of times my discretionary trading is going to line up with these. As we saw, I got long right here. Guess what? That's where the math says that was a feasible spot. Something happened right here. What happened right here? That's where I took my first scale, right? So as you can see, I actually traded with these points. But there's nothing magic about these points. They're pretty darn good. But having them as just a visual indication of where there are potential turning points and potential spots is the reason for this study. It's not some type of quantitative trading system where you're supposed to take all of them. I put a lot of work and effort into this. It's pretty darn good. Like anything else, looking for tops and bottoms, it's going to print repeated signals when a market is trending in this, but heck, it still looks pretty good on this move, right? You got a cluster of signals right around here. You got a cluster of signals right here, which I totally agree with. And you got this one right here after the top. I don't think I've ever looked at those signals with gold. Let's see how it looks. The difference between arrows and circles, and I think there's also like there's triangles as well. They're just different, unrelated mathematical versions of kind of looking for the same thing. So it's like a diversified portfolio of potential signals that kind of, when I see clusters, when they're all agreeing, it's a stronger signal. That's just kind of how I've thought of it. This is, again, just a little prototype, just something I put together. Let's take a look with gold. Hey, it looks nice. Look at that. Again, here's where it can get, the false positives, if you will. Not that it's trust me, guys, there's no math for ever picking all perfect tops and bottoms. You design something, you design it as a feature to have a weakness. If you decide to remove the weakness, let me lay some real quantitative truth on you guys. If you decide to remove the weakness from your system, you by design throw out a bunch of babies with that bathwater. You by doing so remove a bunch of these signals that would have otherwise worked as well. So it's just a matter of striking a balance for you and the intent of the algorithm that you're putting together. A couple questions if I have a paid room. Not really. I have a NADRO course and a scalping course. And then, so yes, there's a paid room that comes with if you own those courses. I've always thought, after coming up, I've been doing this for 20 years. I've been in a bunch of different rooms and things like that. I don't find a bunch of value in a room where you just throw everybody together, right? Like this chat, for example. there's some great things that happen from it, but it's never going to be this thing where there's like sharp accountability and people speaking the same language. We can't even agree on what continents are on the globe right now. So when you put some people together in a room who all speak the same market language, who all see the market through, they may not trade exactly the same. NADRO is just a collection of frameworks. But when you get some people together who see things through the same lenses, that's where the magic happens. No, I do not trade live in that room. Occasionally I'll call something out. I'll put in a good narrative. But I kind of designed it to be a peer community for people to iron sharpens iron and connect with other students and help each other and things like that. We will be launching a new Apteros is going to be an entirely different thing pretty soon in some ways. Still a prop desk, still NADRO in terms of how I trade and kind of the backbone of like our education and things like that. But Apteros, maybe by the end of the year, is going to be something entirely different than what it currently is across the board. Zero teasers. No teasers. There's too many sharks out there. No, I threw out a teaser. I threw out a teaser on Twitter. Was it the night before last or something? I put out the tweet about the DD indicator that we'll have as a part of what we provide to users in a certain way. It's a great name. How am I related with NinjaTrader? Me and Crudele are friends, and Crudele was firing up this new NinjaTrader Live thing. It's a new feature this year for NinjaTrader, and I assume there was about 20 other people that he called and asked to do it, and they all said no. And then he got to me, and I said, okay. Oh, man. No, I don't think Apteros is going to be like OFL. You know, we might have some charts and tools and things like that, but no, that's not going to be our primary focus like it is for those guys. When's the next cat attack? All right, I've been too much in the chat. It's great talking with you guys. I got to get back to my day job here. Let's look for some opportunities. That little move down in the S&P was decent. Let's take a look at what it looks like short term. Not quite a full new low, but certainly running a bunch of stops between 1, 2, 3, 4, 5, 6 kind of bottoms. The buyers came in. We've seen them kind of follow through. The most buying we've seen since the pit open, right? It was just from the middle of weekly developing value. If we come up here and look at this guy, right? It's from weekly VWAP, but weekly VWAP is not the place where I like to trade from. So for me, I was more interested in if this market could kind of hold this attempt at imbalance up from this region on the weekly DVA and go take out those the poor high from yesterday, right? That was the thesis. It's one thing to wick it and then stabilize, and we saw almost no selling during this sequence, but then we saw no buying here. It's another thing to then revisit the lows without running stops. It's just not as good of a an opportunity for my style. My Father's Day gift. Where's the camera? There it is. My kid's head's on this mug. I love this thing. Blind Man asks, what's more important for you, DVA or the prior day's value area? And he asked it again as I'm reading the question. We should put him in like a timeout. Maybe don't answer the question. First of all, those two references are way down on the entire priority list for me. They're way, way down. S&P ripping. Tracy says BLS revision. I'm not going to lie, I don't know what BLS is. Now, all the way down at the lows. So blind man, I'm still on your question, brother. It's just, you know, we're checking out what's going on with markets, but I will give you a real answer, not just the how far down on the priority list those references are. Gold. Gold. Crude. I think the S&P, first of all, it has a weak low from yesterday and a poor high from yesterday and a poor high today and a poor low today. So with that said, I think that the S&P probably by the end of the day is we do not currently have neither the low of day or the high of day in yet. That's my sense of this market. You can find out about all things Apteros at apterostrading.com. All right, we took out a new low in the S&P. Sellers still the dominant force.
Order filled.
I'm long, getting a little lift here. My stop is here. Added. We're having to deal with this -1 standard deviation right here. Scaled out of 20%. Scaled another. Back to the original position size, which is from lower than where this average price shows. I prefer LIFO instead of FIFO. And now it's all falling apart. No sellers on the tape, however. Well, that's a nasty move down on no selling. Oh, did you see that? Ooh, nasty, nasty, nasty. We need to get out of this market. We're, what are we doing? What are we doing with our lives? Gold is getting tanked. All right, let's go look at gold. Gold. 36.95 area on the weekly. Thanks, Kellen. What are you guys talking about? All these news things. I hear people talking about CPI and NFP. What are y'all talking about? What are y'all are scaring me? All right, so gold now with kind of a poor low on the day. Retracing up into VWAP here. It did not like something that it heard. Tried a quick little short scalp. Scratched it real quick. I think we're going to wick into VWAP here a little higher now. Oh, maybe not. It's a mushy high. It's not a good high. S&P pushing to take out those. You can watch the S&P P&L right here on this little custom thing that they built for us to track our positions. So we actually do need to flip over to the S&P right quick. Actually, could I do it right here? Yeah, let's just do it here. So let's wait. Let's look for something closer to up in this range. Back to focusing on gold. Come on, just blow out the top of this thing with a little bit of energy and then snap back so we can hit the bids. A lot of bar-to-bar overlap here into VWAP versus the clean movement we were seeing from the sell-off from the highs. Gold making me do it. Good timing, good selling. Scratch out of gold. Justin, I'm long and short in entirely different markets, my friend. You would never want to be long and short the same same market outside of, and by the way, it has to be in separate accounts. It's impossible to do in the same account. Outside of either some type of scaling out with micros because you were only in a one lot minis, or you're swing long, but then you're trading short term scalp short, things like that. Okay, so gold just needed a little better rhythm, a little better retrace, firming up what's going on with the kind of the condition shift on the weekly. Put on the gold short again. Another good timing, stepping in right as things are turning. Favorable movement right as soon as we enter. That's what we, we're in the zone here. Good timing. It's just a matter of catching where, ultimately the market could turn from and give more excursion than that initial good timing. The good timing is only one piece of the puzzle. So all the S&P was able to do is take out its own kind of micro poor high on the session. It still couldn't take out that poor high from yesterday, and it's kind of just meandering back to where we where our position started from. I want to check out the come on, the intraday chart for the S&P. Big mistake on my part not scaling into development value high. Definitely should have done that. I was a bit greedy there and a bit focused on gold rather than following my normal process for scale outs. So definitely should have been scaled out. I remember I was long 5 and I scaled out of 2, I think, kind of into VWAP or something. But still, for the core position, the initial 3, I should have come out of 1 here. I was a little greedy. Looks like gold is dropping a bit. Let's check it out. Adjust our time frame. I kind of feel like I want to start using tabs rather than constantly adjusting the symbols and the time frames, because I'm using specific stuff rather than just a time-based chart. Let's take a scale. Well, let's hold off. Let's put our fingers on the trigger. Let's watch it press, maybe towards 82, maybe towards, nope, a little bit of buying, so I got to take the scale. That's fine. Okay, I feel like I'm at a spot here where there's really nothing for me to do other than perhaps look to reinitiate some type of a scale in the S&P if we are so fortunate. So back to the chat. What's up? Had to go to work there for a minute, but I'm back. Lumien asks, should the total cumulative delta number be used as a guide to be bullish or bearish on a market, along with other NADRO factors, of course? Is this correct? It's where's North America? Matt, oh, Matt, that got me. Lumion, where delta is in terms of a raw, where is it? Like right now at the S&P, it's plus 2,000, right? Excuse me, gold. We're looking at gold. It's plus 2,000. Where it is in terms of its just raw basic value is one small data point for how we look at and use delta. We have contextual order flow reads. We have short-term order flow reads. There are divergences. There are various readings of capitulations or absorptions, or just all the things that people use order flow to see. But where we are, essentially what you're asking is where we are relative to 0, right? Positive or negative. It matters, a little bit, yeah. Good scale out there in gold. Loon says, do you think you've taught all you want to between NADRO and scalping, or potential more in the future? I think that I have put kind of my my life's body of work out there in terms of a raw, unpolished knowledge base. I think one thing that I can do a better job of is organizing the information and organizing the learning, right? Being a better teacher with the courses rather than a word vomit, a brain dump, right? Just a collection of long videos that really it just takes tremendous diligence and effort from only the most sincere and diligent and serious students out there to truly absorb it all in that format and whatnot and do something really special with it. So I think that's one of the next evolutions, is doing a better job on the teaching front, the communication front for the concepts. And that's part of this next phase of Apteros that you'll see from us. I think swing trading and or kind of an options strategy that I have with Nadro is another thing that might be a thing at some point. Sure, edgy. Yeah, it's as good as anything else. Just a matter of how you want to see the data. Well, Zero asks a question that's an important beginner question for using TPO. He said, "Well, TPO for Nasdaq. How in the world do you see it if it's so noisy with all those letters and everything?" You adjust it by tick size. Even the S&P, I have filtered by a handful of ticks. I forget how many, maybe 5 or 6. So each one of those, like as you see, B, 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 each one of those letters represents like 1.5 points of the S&P, not every tick. So you filter out the noise. So for something like NASDAQ, you might set that at 30 ticks. So it really smooths out the noise and gives you a good visual for day-to-day profiles. Our stop's at a really tough place in the S&P. So I assume we're going to get taken out of this position. Flat the S&P. Got out just before the bigger drop, which might go take out these weak looking lows. So yeah, if we turn the fills on and analyze the S&P trade, I'm still kicking myself for let me take off the strategy. Yeah, that's atrocious. That's that'll be a kick in the butt on my trade review today at the end of the day. That's ridiculous not to take a scale, taking out these poor highs for the session from A period. Traversing DVA. All my students know these are all the formulas for a scale out. That's a severe underperformance on my part. I got greedy looking for the yesterday's poor high to be taken out and only that, and I was just holding out for only that, and that's not how I'm supposed to carry myself. So gold is our only position now, floundering about a bit here in the middle of DVA. I like the stop location. Obviously, if this idea is going to work, it needs a lot more room than this. But I say if the timing, think about the units of risk here. So that's 1R, 1, 1, 2, 3, 4, scaled out for about 5 units of risk there. And we on for half the position, and we have 1 unit of risk on for the other half. Always risk reward skewed for my trades. My win percent might suck sometimes, but I'm never in a bad risk reward position. Would love to re-look for gold shorts a little bit higher. So if we do get taken out of this position, then I will still be on the hunt for that. I assume we'll get stopped out of this trade, or the second half of this trade. Welcome to C period, ladies and gentlemen. All right, gold is making a little push for us. Essentially, this is a little bit of a flag right here. So the flag is just by a handful of ticks here, starting to try to break. And we certainly have a vulnerable area into these lows. We have this, 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 this. Hey, Ashwin, you can check out all about us at apterostrading.com. You can check out the courses. You can check out our desk. Jeff says he is short the S&P. I was just looking at the profile. I was watching C period come down. Boom, there you go. So 64.90 is tough in my book. It's in the general vicinity. I get it. We got the week low, so you're looking for that to be taken out. But just recall, again, I'm not telling you what to do. I'm just comparing notes here. My line in the sand is this kind of 93, 94 region. I think is a really good line in the sand for today. But yeah, if you get something short in the S&P and then it starts to hold below that area, you've got a really good potential for catching something nice to the downside. But hey, if you're only looking to take out those lows, then more power to you. So one thing to be aware of, short term, this isn't my full, contextual picture. But what do we have on the session here today in gold? We have the upper end of this distribution. We have the lower end, right? So anything in this lower region, until proven otherwise by something like a break and a retest and then a continuation from, we're really just running stops in a rotational environment. And that's what the DVA tells us. That's why it's such a great tool for traders to have on their charts is, theoretically anything in between this area and this area, right? This zone that I have on drawn on the chart, that's our developing value area. And when we're inside it like this, we have what's called a current market condition. And the current market condition in that case is rotational. And Once we know the current market condition, we know what tactics to apply, how to handle ourselves, things like that, what trades we can time up based on the full read from higher time frames and context, because context is king. Intraday DVA like this, it's not what we look at to make all our trades. It's an execution tool to get access to higher time frame ideas. That is strong trading, is when you're able to frame a context, have an idea, lines in the sand, understand where things change, and then you have execution tools and tactics. Okay, Philippe, short gold from there as well. Good for you. All right, let's talk downside in gold. This is not a monster trade for me. It could end up being a major top in this market. I'm not interested in that as a trade. I'm more interested in this kind of 36.65 area. Weekly VWAP we have at, what is that, 72? As you can see, this red line right here, we've almost gotten back into our weekly VWAP right here. So can I duplicate this? Yeah. There we go. It's kind of 72 region. So somewhere in here is what I'm kind of looking for, guys. Congratulations to whoever it was that was short the S&P. Just went down into that 64.90 region. There he is, right on time. Atta babe Jeff. Let's throw out a limit order here because gold can absolutely have some major spikes. We have some big activity on the tape here. This is a tough spot for me because we're getting to where I typically am thinking this is the end of a down rotation or the potential end of a down rotation. And I don't want to be too greedy just for this mediocre target, kind of running out of risk reward into this target location. So my finger's on the trigger here to exit this position. It's not going to be one of those things where I give it a huge retrace potential. It's probably the low right there. All right. We'll flatten out. Good trade. Handshakes in the chat. Jake in the chat, who is someone who I would listen to their Nadro narrative ideas very closely. So RIP Crudele. Thanks, Edgy. Yeah, I've had fantastic trades today. Really only one decent winner. But everything I've done today has been just in that Alcaraz flow. Jake is speaking NADRO terminology, so he's talking about a weekly setup with a market profile setup with kind of a fresh condition shift, which adds to the kind of the strength of the narrative, as we call it. So it's a little complex. It's Alcaraz, not Alcatraz. Oh, Philip, I've gotten a little more scalpy in my trading the past year or so, but the core teaching of NADRO is intraday position trading. It's intraday swings. It's trying to find the best trade locations and hold those trades and for hours throughout the day. That's the way it's originally taught. I did not know that that meant pelican. I guess there was a bunch that lived out there when they named it. Yes, Loon, but I got a guy right on my tail. Oh. So far, the exit looks great. Great job of recognizing the extension, the closeness to the area. I still think there's potential for shorting a pullback that starts to turn from this region to then go maybe complete into some of these actual destinations. I do want to take a look at the S&P real quick. For the NADRO folks at home, we want to assess that acceptance picture, right? Where are we relative to that nice line in the sand? Whoa, where'd the charts go? Did I draw this today or did I draw this last Tuesday? I must have drawn this last Tuesday from that older CVA. That's exactly what this. So as you can see, what we drew last Tuesday became the pivotal place for this market over, over a week later on a Monday and then Tuesday. But yeah, market profile's trash, right? Great exit on gold. That thing's almost all the way back up into, it's halfway to VWAP at this point. Okay, so now, this is not acceptance, obviously. This is, really just extended. Sellers are totally dominating. It is rollover, so we keep that in mind. Jai, that is exactly what I always say. Not that volume profile is bad, because it's not. But the beauty of market profile is the simplicity, especially when you just focus on, do we have a good balance and do we have a good value area? You end up with very simplistic, but not in a bad way, a simplistic view of the markets. Edgy brings up a good point. I am genuinely trying my best to help you guys here today. Give the channel a thumbs up, support what we're doing, please. If you could just take 5 seconds to just hit that little thumbs up button. It really helps the channel. It helps support the value add that the entire NinjaTrader Live crew is bringing to you guys. This is a very awesome stream that Crudele's put together. Please support us every day. Whenever you sign on, take a moment. If you like what's being delivered to you, let us know with that thumbs up, please. Appreciate y'all. Gold back up at VWAP now. S&P from an acceptance picture view is still accepted above our line in the sand for today, right? This little C period probe is not enough for us to say, okay, line in the sand, flip, hypo, flip. This is just a probe, as Jeff was able to do in the chat, taking out that weak low from yesterday and capitalizing upon that. It's always great to set profit targets in areas where other people are having to stop out and things like that. It's a beautiful thing. So far, that's just a probe. That's just some better excess at the lows. Still bullish from this region. Context is king. Always be aware of the context. Thank you, Ashwin. Appreciate it. Thought about banging into a little long there. It'd be sacrificing a little bit on rhythm. It's sacrificing, I'm calling the current condition imbalance down. So, you know, the safer way to play this is going to be something more like this, where we now prove that excess it exists. We get rotational relative to development value low, right? And we get some kind of pullback back into the extreme region here to then go take out maybe the poor high from yesterday, right? Around this region. That's kind of what I'm stalking for. Or hypo 2, as my time on the stream comes to a close, is going to be something where we really actually accept below this line in the sand, right? We push far enough, either with price or time, and then we get the retrace, and then we're looking for some of the lower areas, you know, 64, 66. The lower edge of the CVA is confluent with that, so there's some confluence to go with for that area if we get this. And that's it, guys. That's going to be the plan into the afternoon and what I'm looking for in the S&P at least. What's up, gold? You gonna load? There we go. Most of my algo work that I'm doing currently is not on any platform. It's really just my testing area is really with Python, right? So I'm just running those scripts and using what's it called, PyPlot, or some of those different plotting libraries, charting libraries to do that. And then once I find something that I'm really interested in, then I'll come over here. I'll create a strategy or an indicator like I've done here. And I will have a tool that I can use like this. So let's take a look at this algo versus my trades in gold today. I don't think I've shown you guys the little pre-market attempts. Can't do it because the strategy's on. It won't show them. So anyways, I remember where they were. We can show it later. I attempted long here. Unfortunately, I scratched it out. And then we got the big sell-off. I was looking for new highs. We got the sell-off, and then I tried once here, scratched it. May have tried again and scratched, and then caught it from here, which is where we trust the algo, Merritt. You get that, and then right here where this little cluster starts to form is where we exited the position. So again, this thing is finely tuned, and I'd never even put this thing on gold before once, ever. It's very much in tune with, the math is in tune with my discretionary view, because that's what the math is for. That's where the best indicators, algorithms, whatever, systems even, that's where they come from, is when you have those 10,000, 20,000, 30,000 hours of screen time and you are trading. Yes, I'm trading full time every day, every morning. That is when you build those reps and you know what you're looking for, that's when you can start to apply some really cool math and bring out in an objective way, those rules and principles and frameworks that you've come to know as a trader. Try to put it into math. And even if it fails, like I could show you 200 examples of me trying to come up with different little tools, math-based algorithm kind of things to help my discretionary trading. Most of those things are failures. Most of those things end up in the trash can, just like any other great creative process. Guys, you got to keep pushing through that stuff. And it's fun. You get some downtime when you're managing a trade, or get some downtime during, a quiet rollover period or pre-FOMC. Go work on some cool stuff like that. Enjoy it. Most of it's going to be a failure, but the process of attempting that's going to help you be a better trader. Yo, XYZ, what's up, dude?
What's up? What up?
How are you?
I'm good. I'm good. I think I just got trailed out of the short. I regret not flipping long down here, but it is what it is. How's your day been?
Good. A couple of small scales and scratches, and a nice little short in gold after whatever that little news hit, and I caught the pullback into the low, so it was good.
Trading gold, huh?
Yeah, gold's a great market, man. You as an NQ guy would like it.
What's up, chat? Yeah, I had this short NQ pretty much like almost at the highs.
Nice.
Held one, hoping that they'd crack through this and make their way down, but nope. So I got trailed out of that last one, but I think I got a little over 100 points on it. So it's a good start. It's a good
Yeah.
start. We'll see how the rest of the session goes. There's plenty of time for me to screw things up, but let's hope not.
Let's hope not. I believe in you. Chat, it's been a pleasure. Appreciate you guys. Great questions today. Awesome stuff. So give it up for XYZ and y'all have some fun. Tear it up. Get another 100 points. We'll see y'all next week.
See you. Hey, Tracy. Good morning. Good morning. Good morning. Yeah, I had two coming into the zone still, and I took one off because, well, it's been 100 points, and this was like my target. And ultimately, this was my target from the short, right? To get back into the zone, this low volume area. And I was like, dude, this is crazy. Not just absorption, yeah, it's to be expected, but they were lifting a lot of offers, especially on ES. They were buying it super heavy-handed. And I was like, I don't know, I feel like an idiot if I let go of this runner and it goes versus it coming back and trailing me out. But the issue was I could also get a long going, cover the last runner and get a long going because, well, yeah, it would be a pretty good long, even if it didn't work out, right? If I were flat, I would attempt the long was my thought. Conflicted, but it started popping up higher already. And so I was like, oh, I don't know if I want to long it now versus earlier for the risk. So I just held on to the runner and they trailed me out of that last one. But yeah, yeah, Nick, I wasn't even going for G line. I wanted like this little edge right here. So what's that like? About 10 points above G line. I didn't want to get too greedy, but just going through, grabbing this the 680s here, 690. But no, I mean I can't complain. It was I had my entry, I think around like 3839 or 840 and went all the way down. It's over 100 points. So it's a good start to the week for me for now. See how I do things. I wouldn't be opposed to a reoffer here. Let's give it a bit of time. Yeah, considering a reoffer, what I don't like too much is they built this volume and then just came all the way back up into this main spot. But this is where they need to reject. So could take a short here, and if it doesn't work, then it's whatever. But if it does, then it should be a pretty decent move. So considering things right now, considering this order flow, it's not too one-sided, but it looks like the buying is slowly stepping off here. Yeah, sell side's not doing too much yet. Oh, okay, as soon as I get in. What is this, guys? Okay, it looks like it's gonna work in my favor, but I'm gonna scratch out. I don't know what that was. I'm gonna give it more time to develop. We do have still 88s lifting 100 plus against the offer. If I stayed in that trade, it'd feel like a gamble. So I'll wait for a bit more. I want to see what happens to the buying the 88s, around the 88s, give or take a few points. I think I scratched out for like $100 profit or something like that. Honestly, meaningless. That was really weird. But there's still lifting offer here. I'm just kind of being patient. I think if they can offer this, I don't need to be in a hurry to get in. They can start to really make their way down. So no need to FOMO into anything right now. This can easily hold for a pop. Yeah, I'll walk through the short later. It's a lot more simplistic than you'd think. I'm trying to see if I should get a short going on here. Yeah, I'm gonna start with just 2 lots here. I'm not trying to give this too much risk. I'll consider it as a reload of another runner plus another lot for the same short idea. Well, but because I was more patient, the entry doesn't really make me want to put on more than 2 for this particular trade here. So obviously things can develop. I can add more as things develop, but for now, it's as much room as I'm willing to give it. So the offer is still reloading here. That's good. They've unwound a lot of delta within this 5-minute bar here. So how many points stop on this? Looks like 14. A little less than 14, 13, 13 and a half. Dr. Steve. Yeah, it's not just like how far the stop is. It's the fact that they could definitely hold higher, or also the fact that this is barely trying to make that way down, which could just be a sweep, and it's right back, and it's going to stop me out. I did too, because if it does start to inch back up and slow down, I can add there. I can always add on the way down. There's a lot of things. It's always what's going to keep me just calm and relaxed in terms of my risk. This is okay. Also considering it as them taking out my last runner and just getting back in the same idea that we could potentially make our way through here, this low volume area. And now I've got a runner back on and an extra lot. So same idea, same short, just at a reoffer spot. Not looking to get like super greedy or anything. So if it works, nice. I also think if we could start getting downsides, there's a chance that I'll be able to add on at some point. Or if we make our way down to this node, we pop back up, and we stall somewhere here again, I'll just put on more size. But yeah. Patience is always the best option. Sometimes, yeah, the market's going to go without you putting on as much size as you want, but the key word is sometimes. The market doesn't really just move around. And if you look at the day's activity and range, we're not really, market's not in a hurry to get anywhere, to be honest. Generally, I don't even like these types of days where it's really narrow. I scaled out pretty aggressively. So I did have 8 on at the highs, and I took half of it by the time we hit like 20 points. So I was down to 4, and I'm scaling. By the time we hit overnight low, I only had 2 left. So yeah, I was scaling aggressively because these days are just really choppy. Don't want to just sit in something and round trip of like 20 points, 15 points at a time. Usually it's a get my money and get out kind of day. Um, well, it's kind of like every day, but yeah, luckily Well, I'd say luckily, because I did get the opportunity to hold two through a break of low of day and then into this zone where I got one and then trailed out. So I think it's just, I'm saying this to emphasize, like, nobody knows what the market's going to do, where it's going to go, where it's going to stall, or well, you know where it's going to stall, but you don't really know the outcome of the direction, right? And that's kind of just how I always approach it. This was a really good long if I were flat, but we could continue, and I have a short runner from all the way up here. You know, I'm going to go for a break, especially since I've already got paid on 7 out of my 8 lots. And then by the time I was like, you know, I think it's a better cover and then try a long, we're already trading like up here. So just trailed out of that, and hey, missed opportunity, but that's just the way it goes. So as we make our way back into this zone, I'm going to look to cover one and go back down to just one. Am I long or short? I'm short. This is just 2 trades today. This is my second trade. It's another short. I took a short earlier around high a day. I'll run over that. If we can get this cover here, maybe I'll just chase. Nope. Too late to chase it now. I want to try to cover one, get down to one as a runner again. And then I'll outline the short in the morning. It was a pretty simple short. All right, covering back in that zone. So we'll stick this here. And let me put in a limit order. Gonna front run Nick by about 10 points here. 690 is where we'll try to get out of this. Okay, so the short in the morning. This is last week. Let's see. This red zone, overlapping value, volume 2. That led to significant move down. It's the first time back. This is last week. Really nice move down. They held this spot again. So now they're just building into one big node, right? This low volume area. Held it, tried again, failed it. This is the third attempt today. So let me just blow this up a little bit. This is the third time back, left another tail, and they're struggling to get back into this volume, and they're leaving it as low volume. They're just trying. So 3 attempts. Now we drill down, and we've got multiple attempts on the day as well. This one coming off of a pretty good push down, considering the range. Good push down. They're failing, and they're absorbing. As soon as I think, all right, this is going to be given up by the buyers, I'm in shorts, and the move just happens. So pretty simple. It's just, I mean, they made, X amount of attempts. And if this isn't going to go, there's a decent likelihood we'll try this area again, this range, this low volume area, this zone, whatever. And I'm scaling pretty aggressively into the zone because, well, the day's activity is, it's kind of shitty. So the range was super narrow. We're talking like 70 something points. As the short was working out, I am very mindful that this can hold a higher low, right? This could have been a failed attempt lower, and then they hold it up here, and we just continue through, but no, that's not the case. Looks like they're like one tick from my runner here. If this holds, I'm not interested in any more shorts if this holds alongside, because it's going to be a failed attempt back down, and this is an area of interest for me. So if price goes into this area, gets a pop, no surprise, right? First time, they're always going to do some sort of rebid or reoffer pullback. And then they hold higher and they continue through. That's hands off. I think we're just going to make our way back all the way through into the 840s, 850s. So, super close to this. If it takes me out, it is what it is. Like I always say, outcomes, manage the risk. If the market gifts you some profits, good for you. If not, you are in control of how much the market can take from you. If I were flat, would I be attempting this long? Likely. So yeah, that was my short in the morning. I hope that was clear enough. It's nothing too big brain or nothing like that. Um, s- what a crappy day. It's not the best. Yeah. You got to be really greedy in terms of we're not here to just start clicking buttons every day. We're here to see if the market is, giving opportunities. So if you can sit here and be like, "Oh, it's a crappy day," well, I mean, you already have your answer. There's not much opportunity. There's no point forcing anything. No one's sitting behind you with a gun to your head and saying, "Make me money today." Do I use RTH profile? This is RTH only here. My high time frame has entire session profiles for reference, but this for execution is RTH. Yeah, Delhi. Delhi. See, that's like, oh man, I hate when that happens. It feels horrible. And I'm always like, first, why did I even interact with this market? And secondly, if I did and I had a good trade or a decent trade or a decent move, it's like I should have just covered. And I'm sitting here round tripping this thing that could take another hour or two to go the other way again. Or yeah, it's these moments are why like I'm not as good at holding trades as other people. I'm a scalper because I hate it. I hate it so much. Round tripping and all that stuff. Um, but I'm willing to take longs now if they can come back. Eesh. Oops. They can come back a little bit. Yeah. How did you make the sell decision? I'm pretty sure that was probably before I outlined all this. Do I have a course? No, I don't have a course. But we do have something cooking. It's called painting the tape. And you'll see what we do there in depth. Nick, 3 lots long or 3 lots short? What we talking? I am no longer interested in shorts. So either I'm getting long or I'm doing nothing. But I mean, profits are nice today. I can't complain. So I'm just chilling. Guys, if you have questions, fire away. I've pretty much done my work for this session in terms of my own trading, but if the market wants to offer me overtime, I'll take it. I just things I want to see. Can we find out where Stowe is long from? Every price. He likes to buy every price. Do I trade prop? I used to a lot. Most of it was prop at some point. Um, but then you get enough from prop, you just put it into your own account. And I don't think it's far-fetched to say that trading your own account is a lot easier than trading a prop account. There's no rules, no like arbitrary stuff. So it's easier to be level-headed and not get into a market and be like, I need to make some money. You could just sit there and do nothing. No, there's no downsides to it. There's no minimum trading days or there's no this or that. And it's a lot easier to be even keeled about what you do and especially what you don't do and when you don't want to do it. So we are cooking up something for you guys. Is it too late to long this? Yeah, I'll chill for now. We're like right in the middle of this range. Yeah, so I don't know when, but hopefully not too long from now, maybe in a matter of weeks. I, along with maybe the three others in the crew, um, we will be trading somebody's live book. I don't know if I can disclose who yet. Some of you might have an idea. We will be trading a live, we'll say program, and we will outline our stats for you within that particular account, that live account. So you will see our performance, our statistics, all that. So if you think, you know, for anyone that's, there are always doubters, are you trading a prop? Are you trading a personal? Are you trading on sim? You will have your answer. If you think we suck, you might be right. If you think we're good, you might be right. Stay tuned. But hopefully within a few weeks, we'll be able to do that for you guys. And then, yeah, the four of us will just run them how we will with stats, all that stuff for you guys. So trying to make this show transparent. Um, trying to ES short, probably last trade we got. ES, yeah, it's like ES last chance shorts too, in my opinion. So I don't hate it. If it works, you'll get paid nicely. If it doesn't, you will lose very little. So at the end of the day, we have no idea. Right? Manage your risk. One thing we can control is how much the market's going to be able to take from us, and the rest is up to the market. Yeah, appreciate that, guys. Yeah, I'm not sure if you'll find another broadcast that's as transparent, right? Everyone's gonna say they're super transparent, but yeah, I won't get into that. Loon, I don't know. Maybe at some point. I'm not too sure about that. Thanks, Adam. Yeah, Nick, are we? No. Who am I on with today? Oh, I'm on with Leo today in the afternoon. Yeah, I'm double duty today, guys. So I will be back on for Trade the Close with the big cat. But for now, we still got quite some time here. So see if the market sets up any opportunity right now. I can't say I like this right in the middle of the range. We are seeing absorption. We're gonna see that all day. Is it a higher low or lower high? Who knows? If I wanted to put risk on this, I'd rather do it in Vegas. Heikin-Ashi candle, yes. These are Heikin-Ashi. I like Heikin-Ashi candles. They clean up the visual for me, so I can just not have to spend too much time looking at, price and more with order flow when it gets to certain spots. Eddie, you want more direction for order flow content? Yeah, go to YouTube, look up Painting the Tape, subscribe to that channel. Go on Twitter, look up Painting the Tape, follow that account, follow all four of us, follow me on Twitter. Um, for now, as a placeholder, I do have a YouTube account. You can go there, a few videos up there, but from here on out, my content will be, what's that word? Exclusively on Painting the Tapes socials. So it's going to be a blog. It's going to be videos, podcasts, stuff like that. Working on it. Susie, I really appreciate that statement because I think that's a fact of trading. You're going to get what you get. You learn what you learn. You see what you see. Ultimately, it is up to us individually to seek the results that we seek. And I say that in a way of trading is hard but it's not at the same time. Trading itself is very easy. Managing yourself as your own boss in this game is very difficult, but it doesn't change the fact that trading can be easy in the way of, hey, you know, you have a strategy, you know, it has edge, you know what you're supposed to do, what you're not supposed to do, and it's simply sticking to it. That's what I mean by easy. It doesn't have to be overcomplicated. You can do it with a naked price chart. You can do it with this. Some people don't use charts. Pax doesn't even have like a chart, right? He just uses the DOM. So many ways to do it. If you follow your process and your rules, it is easy, but doing so is very difficult. Right? So that's something I always think of too. When I'm trying to reel myself back in some way, getting tempted to put on some positions somewhere, and I kind of can already see it's not really good edge. Like, hey, yeah, it could work. You're getting that feeling like this could work. This could work. I might be leaving points on the table if I don't take it. That's going to be like all the time. It's not about whether it could work. Everything could work. You can close your eyes, flip a coin, press a button at any time, 50-50, 1R. It can always work. We're looking for edge. And most importantly, we're looking for really good and defined edge, right? Um, so waiting for that will do a lot more for your equity curve rather than chasing every potential trade. A potential winner will surface every minute, right? Every 5 minutes and so and so. But that's not what's going to make anybody's equity curve. And if you do it that way, you won't be in this game for long. You know, you can always be the traders that you see on YouTube that win all day. They win all the time. But what they don't show is they also lose all the time. How is this possible? Because they're trading all the time. They're taking a million trades. And if you take a million trades, you're going to have a lot of winners. And then you can show the winners and redact some of the losers. Things like that, right? I don't even know how this rant started anymore, guys. You know how I am. Sometimes I just go off on random rants. I don't even know if it was off of a question, but oh, I think it was off of Susie. Yeah, I'm seeing the chat now. There's a lot of things to wrestle with, but ultimately, the game played properly, the game itself is easy, can be easy. It's us, it's our brain that makes everything difficult. So focus, focus should be on your personality, getting that process and the strategy that works with your personality. The hard part is, well, we don't really know. We think we know who we are until we start trading. And then you start to see like, oh, you know, I'm not so good at this. I'm better at that. I need to do this and do that. So yeah, I'm glad you guys are getting value. Um, Also, we appreciate the feedback, and it's always helpful to know, to hear, to see that we are still giving value, you know, so we know that we're going in the right direction still with our streams, with our content, with what we're relaying. It's a good proof of concept. So appreciate it. Hit the likes, please, if you haven't already. My boss is a jerk. Your boss is a jerk. My boss is an idiot. Are you using RTH? Yes. This is RTH on my main chart. Tempted to short this? Yes. Looks like it's failing, but hey, look, we don't know if it's high or low or low or high yet. We're in the middle of the range, teetering the edge of value. Better edge can be had, so I will stay out and let chat distract me. So yeah, RTH, but these are full session Globex and RTH full day profiles here individually, and this is a 5-day rolling. So that is how I refer to the market. MA, a winner is when you get paid. I don't care, or no one should care how well the trade worked if you didn't get paid for it. It's the fact of the matter, right? That's why winners or losers, it's more of like a blanket term. To me, you're risk on or you're risk off. The market gifted you or it didn't. I use that verbiage with myself because it keeps me like grounded with the reality of things. It's not, hey, I'm right or I'm wrong. The market really doesn't care what my opinion is. The market does what it does. If it worked and I got paid, cool. If not, It's just a function of the market, right? Up or down, it's an auction. I'm only looking to control the outcomes, which are a nice winner, like a scratch or a small loser. As long as those are the outcomes and it doesn't change into something like a bigger loser or this or that or a smaller winner in comparison to your risk, I'm within my confines. It's totally okay. If those conditions look different on a trade, I'm doing something wrong. I'm doing something I shouldn't be doing. I'm doing something that's not even worth doing. Um, yeah, I'm trying to get through chat. I just sometimes you end up ranting, right? And this is kind of the worst part. I always talk about market making decisions, and after it's made a few, after it's made enough, and if they're drastic enough, it will just start to do nothing for a while. Decisions have been made, right? Upside, they made it eventually. Downside, now they seemingly have made another one. And what are they doing? They're just kind of like just consolidating in the middle. They're trying to figure things out. I'm not going to get in the way. I'm going to wait until they figure things out, and we'll revisit. NQTrader, yes, I would be trading those accounts exclusively on stream. And if I trade anything off stream, it will be my own. So the intention behind those accounts are for the stream. So you guys will likely see smaller sizing from me. Probably not too drastic, depending on depending on how generously filled those accounts are. It will affect my sizing. So we'll see. But yeah, the idea of those accounts is for the stream itself. So everything we've done on the account, it will have been on the stream. The stats you see related to the account will be from the stream's trades. Could be weekly, whatever they want to do. Um, but how loaded the account is will impact the sizing. So if it's smaller sizing, hey, that's risk management, right? Rob K. I have an answer. I don't like the answer, but I'll give you the answer. Rob K says, appreciate your rants. How much of your top tier trading wisdom? Top tier, I'd use that loosely. Trading wisdom came from screen time, and how much from books, material, other traders. I will say screen time, like, geez, a large majority. We'll say at least like 70%. And and we'll get to that breakdown. Books, like zero. And that's the reason I don't like my answer. It's a zero, not because I don't think the books are useful. It's that because every time I get a hold of one, right, I'm in a few pages and I just don't finish it. I have every intention to. And it's not that I don't finish it because I don't think it's worth finishing. It's that I need to do things and sometimes I just put it down, I don't revisit them, and then there's another book that I'm like, oh, I want to try this one. And that's why it's a zero on that. It's not something that I would like to say openly, right? Because I don't want anyone to think that they're not helpful. They are certainly helpful. That's why they're popular. So the books are good. But zero from the books. And I would say other traders and other material are lumped in together because it's just my overall exposure, whether it be like YouTube, right? I've scoured YouTube. I've seen so many things, mostly bad, but a lot of good, a lot of good. And you get to a point, I got to a point where through like another 20 hours of YouTube, I can get like a little tiny something, maybe even that. It's a diminishing return on time spent, but that's the game, right? You're looking for everything that can help. And if it takes 20 hours just to get one little thing that makes you 0.5% better, to me, it was worth it. I put in the time to get where I am in the game. right? My approach now seems really lazy. You know, I get to just when I want, this, blah, blah, blah. I don't trade too long, but getting here was not easy. It is as difficult as anyone would imagine, you know, compared to their own journey. It's not easy. It wasn't. I just had my own way of doing things. So also a lot of it is screen time because like 70-80% screen time because that's where I learned who I was. That's where I learned how certain things make me feel, whether it's a market environment, whether it's a market regime over a longer duration, whether it's when the market does this and I do that, and then the market does this, how does it make me feel? It's because largely the screen time is where I learned who I was in the way that is applicable to trading. And yeah, that's my breakdown of that. Long-winded, I know. But I have a significant amount of focus on being able to identify your personality, accepting it, realizing and understanding it as the reality, as truth, and then finding your way around that through process, strategy, management, instead of constantly chasing a strategy, right? Or chasing somebody else's process. It can be different. Some people might look at my process and be like, this guy should never trade. You should never even be allowed to open a chart. You don't have the discipline. You don't this. If you weren't at your desk 30 minutes before the open, you don't deserve to even look at a computer screen right now. And if you haven't lost 3 friends within the last 3 months, you're not cut out for it. You know, that's forget it. So it's like I am my own living proof that, yay, you know, these people who are so extreme about the game, maybe they don't know everything. And I started to explore my own routes, explore my own ways of managing myself and this and this, and this is how I landed here. David Dean, that's another thing. Everyone says don't show your P&L, right? Hide it so that you're not affected by your trade. That was something I could never do. That's why in my trades, I'm seeing my unrealized P&L by dollar value. I always have my P&L on screen. I can see it right now. My closed P&L for the day. Something that I could not do is hide it and disregard it and all this. I just mentally couldn't do it. And I stopped trying to be that person. And now I work around it and I understand like there are some triggers that, you know, triggers that can be set off by having P&L up. And now if I want to have P&L up, I got to work around it, which is why I trade very scarcely in terms of how long I'm on my charts, because I know that the P&L thing could lead to chasing. You want a nice round number. Oh, you gave some back on your high water mark or this and that, or you used to this. I fully understand those things. And that's how I manage myself. I leave a very narrow window to start for all these triggers. And as I'm trading, I'm closing them one by one. I'm closing all the windows. Realistically, right? If I wasn't streaming today, I get that short. It's good. Runners covered. I'm done. My charts are off. I got what I got. Came here. I did my work the right way. I'm going to close all the windows. But yes, you know, the whole thing is, oh, if the market's giving still some edge, push it. Well, I know myself. If I've spent some form of mental capital and the market's still giving really strong edge, either it's still obvious and my plan is still in place, which it wasn't anymore, right? My plan, good short opportunity, and if we get here, I'm happy. And that was the plan. Plan played out, nothing more. But if the plan's still in effect, sure, I'll stick around because it probably would be easier to execute with because I have the plan still in play. But just because the market's still doing things that are within my process doesn't mean I'm mentally still sharp enough to execute it as well as I should and be on top of my own ass. When one window gets cracked open a little too wide, that leads to something like tilt, that leads to this, that leads to that. A pre-trigger to another trigger, right? So I'm very diligent at just closing the windows. I'm here to execute. I do it the best of my ability. And when I feel like, hey, look, I've done my work for the day, that's it for me. And some people can just hammer away at the charts because, well, they're different personality. They manage things differently. Uh, they're better at me in so many ways, right? That's just how it is. Anyone can make it in the game. You just got to be real with yourself and stop comparing. You know, they'll always talk about comparing. Yes, we get it. We get it. It's the same platitude over and over. It doesn't make it any less true, though. If you compare, it's kind of like letting other personalities bleed into your own, but that's not the reality. Yeah, I don't know. The chat's gone by since. Sorry, I want another rant. Uh, is the green streak like 2 months now? I don't know. It's a long time though. Uh, and also I hate that some people might get the idea that like I'm green every day just because like I'm like some top tier trader. It's more, I would say a lot of it is attributed to my lack of staying on the chart. Uh, yeah, a lot of times if I'm blessed enough to be green, which lately, yes, my work's done, but I'm in a different place. I'm in a different headspace, probably about trading in general. Um, but yeah, the streak is still alive. I don't know how long. I don't pay attention to it. I don't attribute a green streak to me being so good or some kind of like outlier in performance. The market just happened to do what I thought it would do. And on the next red day where it doesn't, I'm not going to be like, oh, I did something wrong today and I need to revisit everything. No, the next red day will just be because the market disagreed with me. And it's going to do that. That's the function of the market. Oh yeah, that was about hiding P&L. Yeah, and everyone puts P&L on the trades and points. I can't do that because I won't respect the risk well enough. Because I'm like, oh, just a few points. Maybe I'll add here. Maybe I'll do this. No, I need it in my face. Like, this is what you're risking. This is the reality of your situation. Now do something about it. It's just what works for me. Eagles Chiefs prediction? Come on, man. I'm not gonna say it's the Chiefs. I do hate that the Eagles defense is kind of gutted though, but I mean, if they wanted to keep that offense, especially that O line, yeah, it's the price to pay. Maybe Jalen Carter won't spit in somebody's face and gut our D line as well. So yeah, I don't even honestly, I don't know if it's a hot take. I don't think the Chiefs are gonna see I don't think they're gonna come out of the AFC anymore. After seeing that Bills Ravens game, those two teams are playing a cut above the games we've seen so far. That's for sure. I think that's already probably the game of the year, week one. Um, yeah, Ravens and Bills. I'm not sure the Chiefs come out of the AFC anymore. Maybe ever again. Fractal, yo, let me get one of those stream accounts. You sure can. If you do well enough, you will. I can't go over the top on promoting things, but it's the idea. I was watching a video that you were looking for a dominant absorption and where's market buys and sells not going anywhere. Lito, that's a really loaded question. Um, what I do on the DOM all the way to high time frame is always the same thing. It's fractal. What I'm looking for in the market is very fractal. Effort and what's happening to the effort. If you see like how my zones are drawn, let's say like this offer one, it's effort. What happened to it? It led to downsides. So if price comes back to especially for the first time, I'm going to look for, the downside because this is where all the effort was put in both sides. If you get a build like this, it's two-way tape, buyers and sellers in here. The information given here, that there's more sellers than buyers. If price comes back to it for the first time since that information, I'm going to assume the information remains the same. Cool, you get paid for it. Right? Things like that. Something like this, right? This is yet another attempt at this swing low. Got a nice build. I hate that it built this way because it's hard to really find the level, but I'm gonna assume like to start that it would be around here near the main node in the POC that they would catch price and coming back, I would get here. Well, right. Right now we're seeing the market move up. So I would like to see downside get unrewarded to go for upsides. So as we move up, every time it goes back into the major node, we reject, taper, we go. Same thing as this. We go, we come back, we barely build anything, lose this volume and go. Same thing on the DOM. Whoever's coming in hot, buyers, sellers, or what's happening then, right? If I'm short bias, I want to fade buying. So as buying comes in on the DOM and doesn't get rewarded, well, I'm looking to leave them in the dust. So in a vacuum, that's what I'm doing. Obviously, there's a lot of nuance to it. I do my best to outline them in the videos. We will do better moving forward. I'm slowly working on my own playbook to release to you guys for free. That's work in progress. Be patient. I've got a lot of things I need to do. Market is still trying to make a choice. If they can't even break out of this small range, there's not that much edge in here. So, in the meantime, I will keep answering chat. Uh, Intraday trader, this is funny. Can you explore how you and your partners got picked to star on NT live stream? Well, Deli approached Leo, and Leo went to his Rolodex of friends and found all 3 friends that he had. And lucky for him, all 3 friends said yes. That's literally how we got on here. Um, I had no intention of ever having a following to begin with. My Twitter was blank just for following. Just always been low key, but here I am, dragged into the spotlight. So, hello, chat. I've got aura. I appreciate it. I'm not too sure what that means, but I see it a lot on socials. Who needs to get a mental game book when you can listen to XY rants? Yeah. Welcome to my TED Talk, guys. What's up, Joe? Appreciate that. Appreciate that. Bills, Ravens, Packers, Eagles. You think it's going to be Packers? I mean, I hope it's Eagles. Yeah. Bills, Ravens. Yeah, dude, they're so good. I think he meant the conference championship game, the AFC and the NFC championship game. Heiken-Ashi chart, what time frame? This is a 1 minute Heiken-Ashi chart. I like 1 minute. The other guys I'll use volume based. I like 1 minute. Can I release something this weekend on YouTube? I just released something last weekend on Friday as a teaser for PTT. It wasn't on YouTube. It was on Twitter. So if you were on Twitter, you've seen it. It was the high of day short that I had on NT Livestream through my lens as in depth as possible. So if you haven't seen it, check it out. I think that I don't know, the market ran like 400 points from that short. I took it out at like 100 something points. So yeah, regretfully, but there's something else releasing, Lido. There's something else releasing this weekend. That's better than just a video from me. So if you're on Twitter, if you've been paying attention, you will see it. Hans, most viewed playbook. We'll see. I'm not too sure about that. Can I show you paint the tape channel? I quite literally cannot right now. But if you hop on my Twitter, it's in the pinned. It's literally pinned as like the top post or whatever. Or yeah, there it is. Paint the tape in the chat. Pretty sure that's the one. It's either painting the tape or paint the tape. It's one of those, but I don't think they'd mess that up. Yeah, JD Trader. So yeah, I think you have great honest advice. Yeah, JD Trader. So the thing I say a lot too is when I get on these rants and if I start to like cuss and stuff and the language becomes a little more extreme, do know that it's from a headspace of like it's like me talking to myself. I'm answering your questions. I'm referring to you guys like as chat. But when I'm saying these things, it's always like talking to the younger trader in me that I wish somebody said and things I wish I had known, the ways I wish I had seen it, and all that stuff. And it's kind of like Yeah, that's my mindset. That's what I'm thinking. That's what I'm envisioning when I'm saying these things is wish I had someone to say it to me. Wish I had known it. And it's like if I can go back and say it to myself, this is literally what I'd be saying. So came for the trade, stay for the talks. Yeah, unfortunately, you guys didn't actually see the trades. Well, I don't know if I was on stream yet covering the last of the short down, but that second one was short-lived because the market decided we don't want to do anything for the next hour. So what can I do about it? Sorry, guys. What did I didn't know I muted myself. What was the last thing you heard? I was referring to Tom Brooks's comment about his Bears. Cracks me up. But yes, I feel bad for Bears fans watching yesterday's game. That's for sure. You want to check out Orderflow Labs? I would definitely advise you to check out Orderflow Labs. It's where I would say like 90% of my order flow journey was in there. 10% before they opened, and as soon as they opened, I got in there, and I've been in there since. Um, my entire order flow journey, I've we'll say entirely pretty much. It's been with Order Flow Labs. So worst case scenario, you try it, you don't like it, then you get rid of it. Hey, what's the harm? But the best case scenario is that you will learn a lot. It's a great community, a lot of education, great community. I wouldn't have streamed in there for 3 years if I wasn't proud of the community, if I didn't really enjoy doing so, you know? So I think that says that's a pretty indicative answer. And if you don't like it, just don't subscribe again. It's like a trade, right? You've got good upside. Your downside's capped to a month. Hey, it is what it is. Do I enjoy durian? Do I seek it out and crave it and think about it? No. Will I eat it? Sure. I don't have anything against it, but it's not especially special. No. I'm not a Taylor Swift fan. Yeah. But painting the tape, the marketing, yeah, we hired Taylor Swift's marketing team to do our marketing. Cost a pretty penny. Please support. Yeah. Jay Cairo. I think I do seek to unwind a lot of it's like parenting, right? Maybe the older generations are a lot more tough. They're a lot more fierce. The younger generations are finding other ways around certain things, traditions. I don't want to say like things more efficiently, but you know, you don't always have to lose all your family and friends in the game. And I do want to kind of unwind that sentiment slowly through the younger traders. We have so much accessibility when it comes to trading now. We can do it at home on the computer. Discord exists, so you can find yourself into good communities. Streams like this exist. Education is everywhere. There are different ways to get into the game and to navigate the game now. So yeah, I convinced you. Yeah, well, I don't get any affiliate referral money from driving people to OFL, so there's no code, guys. Trial and error is no joke. Yeah, for a large part, you're just going to get trial and error. But that's what it feels like at least. Eagles Rams finals. Rams, I don't know about that. I don't know about that. But Eagles back to back, I like that. Went to bed after the long. Yeah, that hurt for Bears fans for sure. Yeah, Jacob, durian is potent. Like I can't think of many other things that are more potent than it. I know as a kid, every time like my parents had it in the fridge, I'd open the fridge, you would smell it right away, and I just close that thing. I'm like, dude, how can anyone eat this? As you grow older, you get a little bit used to it, but it's super potent. The only other thing that's crazier is probably like stinky tofu from Taiwan. Dude, I don't think you could find anything more potent than that. Hoodcraft, I have no idea. I don't run a Mac, so I don't know. But I always hear the word parallels when it comes to Mac users, so I'm assuming that's the play. What do I make of this price action? Well, as you can see, I am flat and I've been flat since the price action started. So I traded this move down, I traded this potential reoffer, and as soon as the market made the choice, well, we're not going lower, and they also said, well, we're not going higher. That's exactly what they've done since. They haven't gone lower, they haven't gone higher, which means they haven't gone anywhere, which means there's nothing worth doing. And so I've just found my way into rants somehow. And as I've been ranting, the market hasn't done anything. So apologies for the lack of action, but it'd be ill-advised. My chart's too dark. One can rarely see the content. Does anyone else have issues seeing seeing my chart? Homemade sauerkraut. Yeah, I can't imagine that sounds or that smells very good either. What's a big rectangle? Well, there's two. A red one and a gray one. So let me run you guys through that. The red one is resistance, right? It's this zone here. This one used to be resistance right here, right? This volume, and then it became support. And then it became resistance at some point, and then it became support. So, and it's just gray. If it's like a first touch, I expect it to be this kind of thing. It will be red or it will be green, teal, right? And as the market moves, zones get deleted, they get added, whatever. But if it's something that's constantly flipping support resistance over under, then I just mark it gray. So yeah, these are the zones right here. So MB, I'm not sure what the issue is for you. It seems like people can see it just fine. Production has told me it's fine. Um, Maybe it's a resolution thing. I don't know what your resolution is. Yeah, sorry guys. My charts are a lot tinier than everybody else's. It's because when I trade, I don't like this. I hate this. I hate zooming it because I'm gonna get lost in the sauce, man. I want to see it for what it is, and I'm not even talking about doing this, right? Blowing it up to fit the action, because even then I can still subconsciously think that okay, we've got some range enough for me to work with. I keep it like this, so I'm constantly being reminded. It's in my face, like this is a tiny range. This is like 30% of my monitor, this profile right now. And if I'm going to interact with a market like that, what is this, like 130 points? I need to be very picky, right? So apologize. There will be days where it looks like my chart is scrunched in for no reason. There is a reason. I want to stay very objective with the market. Since I'm very good, would I start paid training and trade room? No, maybe in the future, maybe at some point, but right now, my focus will be on PTT releasing free content. And by free content, I mean literally everything that I can possibly give that is my own alpha to trading. I will do my best to relay it in that free content so you don't have to pay for any of my strategies, my this, my that. It will be there. If I ever do a paid room, it's because I want to be paid for the time that I'm putting in to helping people individually, as a group, as a Discord, all that stuff. Because you guys know how I am on the charts on any given day. Generally, 1 hour is my max amount of time on the chart doing my work. If I'm still trading, it's 2 hours in, it's not going the way I want it to go. It's not to say that I'm getting destroyed, but it's not going that smoothly, right? And if I'm going to devote more time into something like training or paid Discord, it's got to be worth it for me, right? So that's where now payment has come in. It's not payment because there's alpha that's hidden behind something. It's going to be all over the internet. I'm not going to put any of my strategies or alpha behind a paywall. That will not happen. If there is a paid room, it's because it's like a coaching or a mentoring thing or whatever. But either way, it's my time that I'm allocating, and I have to be compensated in a way that, okay, now it makes sense to me to even do it in the first place. So right now, there's no paid room. If you're looking for strategies and you think maybe behind a paywall, I'll release it at some point, no, it's going to be all released for free. Uh, yeah, the chart. So some people say issues with labeling. The chart is very cluttered today. And that's another thing. Usually when I see this, I know that we're either going to be locked into this range where all the MGI is cluttered, or if we break, we can finally leave it all behind, but it's not as likely. So some days like this, when it's choppy, when it's balanced, when it's small range, the MGI is going to be cluttered everywhere and the chart's going to be cluttered. And that's kind of one of my visual cues too. Like, okay, this is what we're working with. Don't expect too much. Everywhere you go is another piece of MGI again and again and again. Like this is horrible because we can't go lower. And as we go higher, we're bumping into VWAP now. Like there's just the runway is there. Sure. Look at the profile, right? Looks pretty balanced, whatever. But in that runway, it's full of speed bumps. So if you're trying to drive through it, you're going to get the experience of driving through just speed bumps every 20 seconds, right? So that's not something I'd like to really trade. It's not something I'd like to drive through. So another example that I give often, and this will be my last because they're going to kick me off the show soon, is when you see a profile, whether it's like this and you look at it and be like, this is shit, or it's really jagged, it's really weird, you can't make anything of it, you can still look at it and be like, this is shit. So if say you're hiking and you see terrain that looks like shit, it's really dicey, it's really scary, you know you can die in it, why would you try to hike it? And as a trader, it's like, why would you try to trade it then, right? If you can look at this and say, I love this profile, I'd like to trade it, hey, do you? If you can look at this and be like, oh, this structure is trash, I would not want to trade this. As a hiker, if you see terrain, you're like, I might get absolutely cooked trying to hike this. Would you really hike it? Or would you just wait? Or if it's like super slippery and rainy, or would you just wait? You know, like the same thing can apply. So this is horrible. Yes, this MGI is, or the volume structure is in a way where you can just keep going through and through, but all the MGI is in the way everywhere. VWAP's right in the middle of this thing. It's 9 o'clock my time, 2.5 hours after market open. We have not done anything. So, uh, yeah, my monitor is a 5K by 2K, 40 inch. So I have a bunch of res. You guys are seeing right now, you're seeing about like 2/3 of my monitor. So the res is kind of high. I don't know how it translates on stream, but apologies. This is just how I do things. I like to not do all this so I can trick myself that there's range and I get myself in trouble. So days like this, you'll see this. I apologize. But where do I mark my pivot? This pivot right here, this is an OFL study. It's called the Joe pivot. It's very good. Trading against it sucks. Trading with it is great. Yes, that's an OFL. So I'm getting kicked off the stream now, backstage. So I'll be back for the close. It's me and the big cat today. So I'll see you guys then. Thanks for hopping on. Thanks for staying on if you're still here. You know, we didn't get too much trading for the duration of the stream. But to be fair, they didn't really give me much to trade afterwards. So with that, I'm going to sign off, and I will see you guys in 2.5 hours. See you guys.